How's everyone doing?
Hi, James.
All
Good.
right. Talking,
How's
Good.
your
everyone's doing good. We're talking, I will say, guys, I feel like we're seeing a little bit more action in the market all of a sudden. Right, bodies are growing a little bit, so we'll talk about that a little bit more. But wait for kind of people to log on right now. We're talking about passive flipping. We've kind of been covering this the last couple weeks, as far as like asking for money, how to raise capital, how to bring it in, and then how to partner with the structure. And, last week we covered kind of like how to use the partnership calculator, how to offer out the capital that way. And then we're going to touch today on the concept because I just had to do this in Newport Beach. It's a very real-time situation where I had to do a massive pivot. I had to bring in an operator equity partner instead of a general because my general exploded, and why
Mm.
it's okay. And so we're going to talk about the concepts and I'll play with the spreadsheet and then open it up. So, the goal, guys, is to always just try to think a little bit bigger picture, and that's kind of what we're going to focus on for tonight's call. But Dennis, I see your hand shot up right away, so we're going to jump on this. You guys, if there's any urgent questions as people are logging on, let's just start hammering to those. Because if I see the hand go up that quick, that means we got something to address.
Thanks, James. So yeah, I'll get right to it. A couple of weeks ago, I told you I just got a flip under contract,
Oh
and we
yeah,
were
that it looked like a good one too, dude.
yeah, and we were going through the layout, and I finally got measurements for it. I'm gonna share my screen. You had a
Okay,
recommendation about like combining the bathrooms because let me jog your memory a bit.
looked like a solid deal, dude.
Yeah, thank you. I'm excited for it. Do you see a photo of like a floor plan?
Yep, got it right here.
Okay.
Very small photo. Actually, a bathroom and a half bath.
Is a small photo? How about I zoom in a little bit?
Oh, just I see the bedrooms on both sides. I just
Oh, yep. Yeah, so last time we talked, you were like, oh, because this property is in Magnolia, you're like, since this is the primary bedroom, they would much rather prefer like a shower in here somewhere,
yes. Yep.
right? So you're like, get the measurements for it, and then we'll see if we can like decrease the size of this shower to maybe make this one a little bit bigger. So I did get the measurements for it, and it's gonna have to be two separate photos because it won't show up on here, so bear with me.
Yep.
This is the bathroom on the right side, okay?
Okay.
Do you need to let me zoom a little bit?
Now I'm grabbing, let's do this. I'm gonna grab a little paint too at the same time. Nope. Okay. Right there. So we have 6'8" by 6'10" wide. And then we have on the other side, what's that bathroom? So 6'8". Five. So we're basically 10'3" by 6'10". Does that sound right for the total space?
I did not combine the total space, but yeah, we have like 3.5 and then like 6.8.
Okay.
Yeah.
Yeah, so we're looking at that. Let me do this. Can you stop sharing for a second? There we go. Okay, let me grab this. So you guys, when I'm doing this stuff, we kind of have a couple options on this floor plan. He's selling a house. He's selling it for a good number, though. He's not pushing the price point up too hard in the area. And there's probably some higher comps that he could be using in the zone, but then it's going to need certain amenities. And so when we were talking about this, it's going, well, his comp's very achievable, even with the one bath. But is it better and more sellable, especially if we're in a slower market, just to have the second bath? And so what we want to do is play around with the flow. And so I'm going to share my screen right now. Hold on. I try to get Zoom back up. Yeah. So, and you guys, I will say Victor's educational breakdown on how to use AI to or VAs to tweak these floor plans, it really is helpful. So definitely watch that because I do it a little bit old school because I'm just been doing this a while. So I'm like the old crotchety guy that likes to do it his own way. So to recap the spaces, we had what 10 foot. It was 10 foot 3. That's the total distance between the two bathrooms. Then we have on this side, it was 6 foot 8, right?
6'10".
Oh, 6'10". Okay, even better. Okay, so we have 6'10". So the first thing I'm looking at is 6'10" is not deep enough for a bathroom because we need kind of a minimum of 8 to work with that depth. And so 10 feet worked good because we could go, okay, well, we could get, a shower's roughly 4 feet wide or 10 feet wide, or 5 feet wide. And so we can kind of build off that. But when I'm looking at this, we have our exterior wall. And if we cut this right in half, we're 5'3" by 6'10", which is going to give us a very weird. You know what? Actually, this might work just straight down the middle. Okay,
Like
so
5'5", you mean?
so again,
Like straight down the middle would be like 5'6", right? Because it's
yeah,
10
about
feet.
5'6", and we're just going to kind of play with this at first. So you guys, I always start with the middle. Okay, what can we meet in the middle at all? Right? Like, can we make this work? And so in this scenario, though, that gives us 5'1" on both sides of this wall. Then we have 6'10" to work with. Now 6'10" is not going to give us a ton of space because 6'10", 6 divided by 12 is, we got 6 times 12 is 72 plus 10 inches. So we have 82 total inches. A toilet's going to take 30 inches total. So it still does leave us 52 inches to work with to get a vanity in. And, which we got to give a little bit of spacing. But in theory, we might be able to get a 48-inch vanity, a 4-foot vanity. If that's the case here, what we're looking at is we could then go, okay, so first thing with the primary is, okay, maybe we have a vanity here. Then we have our toilet. So I start with building that first. The reason I'm putting on the exterior wall is because we can still put a window in behind this toilet. Vanity has the wall space. And now based on this though, because we're now 5 feet wide, this cabinet's taking up, the toilet and everything's taking about 2.5 feet. So we only have 2.5 feet to work with, which is not going to give us the width to get a shower in because we need a minimum 2.5 to 3 feet, really 3 feet for a shower. And so this is our first predicament. Okay, we know meeting in the middle doesn't work where you keep them totally separate. But what we do have is an opportunity here, and this is what I wanted to measure out. And this might not work, but we always do want to explore this. So what we need here, because we know we have 5'1" on both sides. We know a shower is going to be roughly 3 feet curb, and we could do a 5x3 shower. Okay. So as we're doing this, you guys, it's important that I go, okay, well, I got roughly 2 feet for my vanity, which is a little heavy. Vanities are usually about 20 inches or so, but we're gonna say 2 feet here. We know we have 3 feet for the shower here, 3x4, or it'd be a 3x5. No, it's too tight. 6. This is tight. So let's just see if it's even doable. I have came up with this new plan, Dennis, that maybe you can be the guinea pig on if you want. That I might try on a house soon.
Let's go with it.
You guys on these tight bathrooms, I'm actually thinking about doing an oversized shared shower and then still dividing the rooms and having swing doors from both. So it's like people would have their own toilet vanity in one room, and then they can share the central shower instead of having none. It would be like this big oversized shower in the middle with two glass doors on both, so people can still separate. They still have their vanities in the. I'm going to try this on a house to see how this works, but the problem is right now we're 6'10", so this works. We have 10 feet, so we're losing 2.5. So now we have 7.5, a little bit more than that. We need at least 30. Grab a calculator so I can do this in front of you guys. So we have 10 feet times that by 12. It's 120 inches in total space. Then we have plus 3. 123. We're going to lose roughly, I like to be a little bit more. We're going to say 22 inches for that vanity off that wall. That gives us a 101 inches, which is going to be 8 feet left. So the issue being is if we need 3 feet for this section roughly, we're going to lose 3 here. It's only given us 5 feet 4 left over to get the shower in for this bathroom too. So what I was hoping is we were going to be a little bit bigger, like an extra foot, and then we could actually probably make this work, but it is too tight to get. I was hoping we could put 2 small showers on both sides, but you don't have the room because once we take the 10, 3 minus 2 feet roughly for the vanity, a little bit less, minus 3 feet for the walkway, we're at 5'3", and then we got to add 3 feet in for the shower. Now we're at 2'3", so we just don't have the space, and so we're missing about 2 feet. But these are things we always want to explore, because if Dennis could do that, he might get a bigger premium on his house. And so right now I'd probably leave it more the way it is. Do you have a picture of the bedroom behind that bathroom? How big that is?
Yeah.
Let's pull that up, because there might be a way to cheat a shower into that bedroom. I think we might have already looked at this at one point, but
No, we didn't.
we did, and the bedroom's too small, right?
No, the bedroom's pretty big.
Okay.
Let me
We have
screen.
one more option then.
So let me get the exact dimensions of the bedroom. So this is like 10 feet. And then the width
What
of
about
it
the
is,
one behind it, though?
oh, this one right here.
That's the one I'm more concerned with.
So from here, here's 11 feet 4 inches.
Okay, what about
And
the
then
other
up
way?
here is 11 feet 11 inches, basically 12 feet. But this is a
Okay.
big window right here, though. So
Oh, yes, that's right. And we don't want to move windows. The
yeah.
okay,
So this is the window for that one, for that bedroom.
because one other option is you have 6'10" coming this way. Your vanity's going to take up 40 inches, 30, so that's 70 inches for your toilet and vanity. Divide that by 12. That's what we got. You could do a 40-inch vanity plus 30.
In the chat, I just dropped pretty similar plans from the Cremona house.
Okay, hold on one sec. We'll pull this up in a sec. I think because one thing you could do, because you have 6'10" there. And to
Hmm.
get a small bath, we really just need 8 feet. You can get a very small bath in a bathroom that is 8 feet long. And so one option you could do is you can pop a shower because you could put like a 36-inch vanity, a toilet, and then pop a shower and go into this bedroom just a little bit and get close to this window wall. I think you have the space there. And so what
The
you can measure
top
is
bedroom.
yes, like right where that mouse is. If you popped a shower there, and then I would demo out the closet on the other wall and put the closet next where the door is, and then move the door down a little bit.
Oh, I gotcha. Okay,
And so
so
you'd
I
be
have the
shrinking
measurement for
your
this. This is 2 feet right here.
okay. So and if you're 6'10", that gives you 8 feet 10 inches. If
Yes,
you go 8 feet long, you can get a 36-inch vanity, a toilet, and a shower in there.
gotcha.
And
Move this
it's
up a
not
little bit
that still gives you like 10 inches to work with to leave it off the window wall because you're 6'10" plus 2, that's 8'10". You only need 8.
Gotcha. Okay.
And so you could pop in a little shower and then run your closet where that door is and move the door down.
Right here.
Yeah. And that's going to be a very cost-effective, cheap way of doing this. And is
Hmm.
it going to give you the most amazing primary bath? No, but they can shower in their bedroom. And that's an amenity that a lot of people will pay for, even if it's small.
Oh, I see. Okay.
And it won't cost very much because it's the frame walls, nothing's really moved. It's one frame wall. The plumbing's all right here. They could slop a shower pan right in, and then your closet space comes down. Your bedroom's gonna get a little small, but it's already kind of small. And I would rather have a little bit better primary and a little bit smaller bedroom off that. Because are you only 2 beds up or three? I can't remember.
Upstairs is 2 beds, and then downstairs is 1 bed. No, two
Okay.
beds. Yeah, 2 beds.
So, and so what I would do, Dennis, is look at the cost, see what the contractor charge you, then look at the comps again. And can you get any sort of premium or is it selling faster? And then in that comps, look at that second bedroom because a lot of times they're going to be smaller. Just make sure you're not pinching it too much. And if it is a little bit smaller bedroom and I'm thinking you might get a little lift on your value if you have a shower in there, it's
Yeah.
probably worth the money to do. And you're not moving a lot of things.
Yeah, that was gonna be my follow-up question. Since I'm like considering moving the layout of this now, do you think I could still get by with the subject to field?
Oh, for sure. Yeah, you're not moving this wall. You're only moving this wall 2 feet.
Okay. And like since I'm moving this, like it'll still be cool.
You don't need to move that middle wall at that point.
Wait,
You're only moving the
double
shower
shower.
back. The width of the bathroom's not going to change.
Oh, I see what you're saying. So you're just saying move this portion up a little bit.
Yeah, because you have the
This
room to
back wall.
get a little small shower, a toilet, and a vanity in, and then you can put the closet on the other side. So it's not very much work to tweak it, and you're sacrificing a foot off your bedroom to get a shower in your primary, and I think that's a good trade.
I gotcha. And then this bathroom would just stay the same.
Yep, that bathroom stays exactly the way it is.
Okay, I'm following now. Okay, that's why you're like, this is where the closet should be because since I'm moving this up, we're gonna have this extra little space.
Yep, and then you move your door down a little bit.
Okay, I'm following. Okay, yeah, let me play with that then.
Yeah,
Uh,
look at the comps, and it's just not very much. And I think you like in that primary, I do like a cool pedestal sink, maybe like a cool built-in medicine cabinet, and then like a cool like it just gives it this tight little feel, but it gives them the amenity.
yeah, and you're thinking the shower should just go right here then?
Yep. Yeah, because you only need 8 feet and you have 8 foot 10. So you can make that fit and it won't be very expensive.
Okay, and the toilet and vanity would just stay right here.
Yeah, and they might move that down a little bit. Like the vanity should be 36 inches and
Yeah.
the toilet
Okay.
should be, and so just space it accordingly, but it will work.
Nice. Okay, I'll play with that and ask what the bid would look like. One more question I had, since I'm able to close on permits with this with the seller, what forms do like I need to fill out with the city to allow them to like authorize me to do that?
You can be their agent. So you could be the agent of the homeowner.
Hmm.
Um, so they can sign something saying that you're the agent allowing to submit for the permit.
Is there anything? like, is there like an official form from the city of Seattle that I need to fill out, or is it just like,
It's on the permit submittal. They can write down, you'd write down your name, and then you can put agent, and then they would sign that same permit intake form.
okay, so there's no like authorization form or anything. It's just,
You can also get an authorization form. I've done it via agent just because it usually keeps it kind of clean a lot of times.
okay.
Just because the homeowner's still on it and they will sometimes push that faster than an LLC. Um, but you can also get an authorization from the city as well, a form.
Okay. If I'm doing it that way, would it make sense for me to just pull the permits myself then through me acting as an agent, or would my contractor still need to pull, or should they still pull the permits when they're doing the work on their own?
Well, you could pull the building permit as an owner, and then they would pull the electrical, mechanical, and trades.
Oh, I see. Okay. Okay, that makes sense.
And you're not doing a lot of frame wall work, so I don't think you're not moving a lot of stuff around, so you could almost just get away with plumbing and electrical permits, I think.
Yeah, this is the only thing I'm moving if I am moving anything.
Yeah,
Everything
so
else is
that's
pretty
not going to
clean.
be, I don't even think they notice in the field.
Okay, sweet. Okay,
Yep. I
awesome.
honestly, if it was me, I'd pull electrical and plumbing only.
Sweet. Thanks, James.
And those
Thanks
are
for
over the counter, so it seems better.
Yep.
Cool. All right, guys. Well, I'm going to pull up. So again, you guys, so the last couple weeks we've been talking about, last week we talked about how to structure your deal, the partnership calculator, how to raise capital, um, why bringing in partners and why pass it, like the benefit to the passive flippers, like talking about, if you're going to invest in someone's deal, what kind of return do you want to make, what to check out for, kind of gone over this last couple weeks. And so what I want to do right now is show you, my goal is always to kind of open up your minds to ways I've structured deals, that I've gone to different structures, because I learned that sometimes the way I was doing it wasn't working as well. And there's a time and place for everything. And you guys, the reason I bring in partners sometimes as operators is because if I'm not doing a project that I can be the most efficient on, I'm going to spend more and it's going to take longer. And sometimes bringing in that operator and giving away some, there's really no trade difference going on there. And there's ways that you can structure it. And so what we're going to talk about right now, I'm going to pull a pro forma so I had an issue last week that I posted in the Facebook page. I closed on the most expensive flip I've ever purchased. It was very expensive. I was pretty nervous about it. And my contractor exploded literally the day before closing. And I guess the exploding means I got a call from a couple lenders I know down there, and they said the guy's behind on payments on his buildings. And even though I really like the guy, he did a great job. We did a great job in our last project. If someone's going to tell me that he's running behind making payments elsewhere, I cannot bring him in to this project. Even though I still wanted to, and I think he could finish it, there's that risk that I can't take, and especially on the most expensive project I'm doing. And so last minute, I had to call, and I met 3 different generals at this project, and I met 2 different operators. And I called everybody because I wanted the most amount of resources to walk through it with me. And what I ended up going with on this project is I ended up giving away, because, and this is a lot of profit I'm going to give away. I'll show you 50% of the deal on this. The reason I did that is because we're starting filming in Seattle. We have a bunch of projects going on. I'm not local in California anymore. And I need someone there to make sure that the project is moving quickly, because on a big purchase, the interest is very expensive. And I could have brought in a general contractor that I had bids on. I'll show you guys that math. And I could have kept 100% of the profit. But I structure it in a different way so I can have peace of mind, and I can focus on what I need to focus on up in Seattle or down in Arizona. Because if I'm busy down there, my stuff down here loses money too. And this is what I'm trying to really open your eyes, you guys. I've learned bringing in partners will make me more efficient, not give away profit. And the more efficient I am, the more profitable all my different businesses are. And so sometimes doing less and giving away more is actually the right move. And that was something that took me a long time to figure out, because I was always the person that was the operator. And I, over the last couple of years, have started bringing in some operators because it's the right move for my team and it's not going to kink the rest of my system. And so what I'm going to do right now is I'm pulling up the Performa. And you guys, I was really struggling with this as I was bidding this out. I'm like, oh, I'm going to give away half this deal. I'm going to give away half this deal. But then I really had to look at the math. You're right. That is the thing. We want the math to speak to us every time. So let me give you guys the Performa. I was doing this in reverse. I'm going to do this a different way. Okay. So you guys, I got this property in Newport Beach for $6 million. Okay. Again, this is an expensive flip. And the property is 4,300 square feet. This is a high level construction. We're going to try to sell it for $9.5 to $10 million. This needs tremendous amount of thought and care. Nothing can be really unbuttoned up on this house. We can't be like, yeah, that's just good enough. It needs to be done right. Now, the cost of construction in California can be very expensive when you're doing these things. What I've learned about California doing market research is if you're actually out in, Riverside, some other areas, it's actually a lot cheaper than it is in Seattle. But in Newport Beach, higher end markets, it's very expensive, halfly because the materials you're putting in, but also the labor costs a lot more. So I met 3 different general contractors out that were all very reputable. I brought in generals that I knew had a much better system. I've watched them build ground up. They built really nice products. They're definitely a good, reputable company that works with investors. What I found is, my original budget on this property I thought would be 135 to 1.4 with my contractor that I had. Now, because it was last minute, I had to get 3 other quotes, and those quotes were ranging anywhere between $325 and $400 a foot to take it to the level that we want to take it to. So as I was getting these construction bids, at $350 a foot, it was going to put me at a 1,505, right? And even though I know I just did my other project for quite a bit cheaper, I had more bandwidth down there. So in the scenario I'm in, even though I know I could get it done cheaper if I can grind on it, I had to hire one of these companies, and my costs now we're going to go from 135 to 1.5 and change or higher. When I looked at the deal and they quoted me that they were going to take around 6 months to finish the project, 6 to 7 months. My Performa then was at 9 months because I factored 2 months to carry on this house, 2 to 3 months. And when I look at the deal, after pricing out, best bid I'm going to get is around 1.5. So for 9.5, they're done in 9 months. This is why we want to let the Performa speak to it for it. The profit on this deal is going to be $1.168 million, which is, as you guys can see, a 59% return. So it's no different than what we are doing in Seattle. It's just a different product that requires a lot more cash. So on this deal, I'm coming up with roughly 1.9 million to do the deal. So as I was going through this, I'm going, okay, well, I got to fly. I got to move around. These guys I'm hiring are a little bit reputable. That's why they're charging me more. They're going to be able to run this project. But still, no matter who you hire, you guys, you have to still manage them. And, I was like, am I going to need to hire a project manager to check on them, or I'm still going to need to come down there? So it's going to require me more time. And I had an upside of making 1.168 million on this with those numbers. So I took my core construction numbers, their timelines, I input it into the budget sheet. There's my numbers. From there, I felt a little relieved because I had some options, even though it wasn't really what I was looking for. I then met with 2 operators. Now, these operators, you guys, are pretty legit down in Newport Beach. They run a good business. One of them is fully staffed with his own bodies. But to bring them in the deal, they want half the profit when I talk to them. They're like, hey, dude, I'll partner with you, but we're partnering, and I'm going to take half. And so we talked about that. And I said, hey, well, it's requiring a lot of cash in the deal. Let's go through it together. I want to see what you can bid it at, because if they were going to bid the property at 1.35 million or 1.5 million, that doesn't make a whole lot of sense for me because now I'm giving away half. I could just hire a couple project managers, manage that contractor, and still be in the green. But after walking through, the first guy came in about 1.4, 1.42, but he wanted half the profit. The next guy that came in, he can actually do the project for 1.3 million because he has a fully staffed crew. Like he does all the framing himself, he does all the stucco, they do the roofing. He has the bodies ready to go. In addition to, he has no houses going vertical right now, and he's got a full team that he needs to put to work. And so when we're talking, I was telling him, hey, look, you know, if we can get below this 1.4 number inside budget, I'm open to doing the equity. But I also set the time frame of going, how quickly can you do this? You know, general contractors are quoting me at 6 to 7 months to do the project. Can you get this done in 5? And can you guarantee you can deliver this in 5? He said he can get delivered to me in maybe 4, but 5 is reasonable. He swears he's going to deliver it to me in 4. But now at this point, I can go, okay, well, my hold times now are going to be reduced a little bit. And these are things that we want to think about. If we're bringing an operator, are we going faster? And are we being more efficient? And so by picking up the 2 months of hold times on this, it's going to help with my annualized return. He now can get the budget now down for 1.3. You know what? I'm still going 1.35 because we're going to upgrade a couple of things, but he's going to be probably 1.35 now, and he can fix the numbers. So again, he can control his own costs because they're doing a lot of the install and framing themselves. They frame all the houses themselves. They do all the siding themselves, the windows. They install pools. And that's what we were talking about. Hey, where do you get cost savings by using your guys? Instead of paying 100 grand for a pool, I'm going to pay 50 grand for a pool. So that's how we're picking up all this cost. And so after going through them, I'm going to save about $150,000 on the construction. And the house is going to get done at 2 months roughly earlier. Now, the cost to hold this deal is roughly $45,000 a month. So that's $90,000 in interest and $150,000 in savings of cost. So that's 250 grand. Now, when we were looking at the pro forma, though, it said 1.1. So I'm now giving up 600 grand to save 250. That doesn't sound like the math makes a whole lot of sense that way. And so what we want to focus on, though, is when I was looking at that deal, it was a 56% cash on cash return. Now, how I ended up structuring the deal with this operator is I told him, because it is a lot of money that's coming out of pocket, that I'm going to charge a I'm open to doing the deal 50-50. At that 1.35 million, he's still making a little bit of money inside that construction. And I said, that's fine. You can make some money on the construction. It's not a true cost plus, but I need to make some money on my money because you're bringing the crews, I'm bringing in the money. And now we're splitting it. So it's got to be equal at that point. And I negotiated a 12% pref on my money. So I found the deal. I got to come up with the 1.8, 1.9 million. I'm investing that money into the deal. And the 12% pref now comes right off the top. And it's expense to the deal. From there, we're going to split it 50-50. So by telling him he's getting 50%, he's into the deal, now I have to make sure it's the right financial decision on this. Because I'm not afraid to do the work. And if I need to fly around, hire someone to manage a different general, and I can make a lot more money, then I'm going to look at that. But the big difference is now he's putting more profit in the deal by saving me money and the time. By him going to 2 months off the schedule, the cash on cash return goes from 56% to 78% for the deal. When we look at these numbers, and this is what I want you guys to evaluate, I went through these exact motions with this guy. When we sell this property, right, there's $1.3 million in profit after we back off all the leverage costs, including my pref return. When we sell the house, I'm making the first $128,000 on this deal. The cash gets paid back, the down payment, and I'm making the first 128. It comes off the top. He's now making this contractor has an upside of $650,000 on this deal. That's a huge upside for this dude, right? So he's stoked. But I'm not looking at it like I'm giving away 650,000 right now. I'm going, hey, I'm making 782,000 on this deal. And again, you guys, I have a lot of money in this deal. That's why the profit's so big. It's the same cash on cash return as Seattle, just so you know, or most markets. But if I look at what the return is, if we look at this, I'm giving away 654. And that's where people make the mistake. I'm giving away $600,000. But I'm really not. And that's what I had to come to terms with, because I'm making 782,000 and now we're doing it in a quicker time frame. In that return, if I hire it out at General, it goes 9 months, I sell it, my cash on cash return was 55%. Now my cash on cash return is going to 43%. And so I can look at I'm now making only 10% less on my deal on a cash on cash return basis, and I don't have to fly there as much. I don't have to manage the subs. I don't have to manage the quality. That is his job to do. I have to design it. I have to spec it. I have to work with the permits. He handles it from there on the install. In the amount of time that I free up, this is probably saving me at least 50 to 60 hours of my time. Not only that, the stress goes down and I can focus on stuff that I'm working on in Seattle. And so as we're doing these things, you guys, if you're looking at bringing in that partner, so like me, I know how to flip a house. I just did a house in Newport Beach for 1.2 million on the reno that was bigger than this house. I can get stubborn and go, well, I want to make the whole thing. But making the whole thing actually is going to cost me more money later, because I'm, again, not focused on my business in Seattle. I'm not focused on my projects. I'm not focused on the relationships. And I'm going to be less efficient and less managing this project. And so I'm giving away I don't ever want to think I'm giving away 650,000. I'm giving away 10% of my profit, really, to have a much more efficient business. And so you guys, as you look at these things, that's what this calculator is built out for. It's not just to give away 50%. I gave away 50% and negotiated in the pref, because if the pref wasn't in there, my cash on cash return goes from 55 to 39. And so the purpose of passive flipping it's to bring in operators and partners that will make you more efficient, that will lead to better returns, and you can give away a lot of the return and you still can be very, very close to what you were anticipating making. And so that's what I kind of wanted the concept about, because the last couple of calls, we talked about joint ventures, we talked about structure, how to raise the money. This is the concept and why this is important. I just partnered with somebody tonight, or someone from our group. My team was not efficient at this product right now. I brought him in. I found the deal. I put up the money. He's coming and running the project because he's much more efficient at dadus than I am right now. By doing that, I'm not, again, thinking about I'm giving away half my profit. I'm making myself more efficient, frees up time. I can go make more money. And my overall returns on how we're structuring that deal don't change that much. And so don't always think about what you're giving away. What are you getting back? If it's time, that's a huge bonus. You need to factor that. But then look at the actual return. Again, I gave away half the profit, and my cash on cash return went from 54% down to 43. I only gave away 10%, not really 600 grand. And those are the things I really want you guys to think about, because that's how you can really scale your businesses. You can only do so much. And I always push it to the red line. Once I go past that red line, all my businesses start to suffer a little bit. And so keep that concept and let the math speak for it. Don't think about just that surface, hey, I'm giving up half. Because that's I saw Jason's face when I go, I'm giving up 650 grand. He's like, whoa, but I'm not. I'm again, the amount I'm giving up 10%, and in that 10%, I with 50 hours, I can easily out earn that and be more efficient where I am. So I want to open it up right now. You guys, again, any questions are welcomed about what you guys going on. But I do want to think like who's on the call tonight that is like maxed out on growth. And our job, you guys, we're always going to get maxed out, whether it's capital, deal flow, partners, operate like or contractors. That is where we hit that bottleneck, but we have to pivot and shape our business around that. And if you, that's how we scale, not just going, I need to do more deals. Doing more deals can be detrimental sometimes. So I want to open it up. And again, you guys, it can be any question you have going on. And let's talk about that, because if you have a bottleneck, you guys, and you're stalled out, it's easily fixable. We just got to look at what's the right solution that mathematically works. Let's see what we got. Oh, Brittany says, I'm writing on behalf of CJ. Oh, Brittany, I will handle this. We will make sure this is handled. Hey, Brittany, where's he deployed at right now? Okay, let's see if she answers. Maya asked, why would you choose 50%? Could you not have given less, like 30 or 40%? Because the guy wouldn't do it for less than 50%. And the reason being is he knows his worth and he knows what he can do. And at the same time, if I gave away 30 and I got to negotiate with the guy, I'm going to pull up my screen again. And in what I did negotiate to make sure it's worth my while is that 12% pref return on that. And so no matter what, I'm making 12% on the money invested. Now, if I gave away 30% and I didn't charge the pref, let's play with this. So I'm making 782 at 50% and 12. If I give away 30%, I'm making this. I want to do this one more time. Okay, so again, 780 with a 12% pref and half, I'm making 782. With a no pref and 70%, it's at $1.5 million. Because he came in under budget is why I gave more on this. If the contractor that would have been hands-on came in and his budget was 145 and there was less value there, I would have gave away equity. But he's already saved me 10% off the top. And so by doing the 12 and the 50, I'm giving away about 120,000, but this guy is going to get it done quickly and fast. And so, it really just depends on who the operator is. But guys doing these kind of projects to this level, they typically want a lot more. Like if I was going to take this project on for Newport, I'd want half as well, and I'm going to run it. And so, for me, it was kind of like a get what you pay for thing. Now 40%, if I would have done 40%, the pref and the 50% equity is actually more profitable to me. And so that's what I want you to play with those numbers and see how you offer that. Now, other contractors in Seattle, which I have a lot more resources for, typically I do a 70-30 prep because we can do the work, we can do the deal, and I have no problem giving away 30% for that person if they're going to treat it like their own. But with him, it was worth it because he's getting it done faster. The other operator couldn't get it done in 6 months either. He was going to be 9 months. So this guy was the fastest, the cheapest, and he actually is ready to start demo like on Wednesday as soon as we have a permit. So he was ready to go. And for me, it was about getting it done, getting it moved fast. And I gave him his 50%, but I put the 12% on my money. And then you guys, he pushed back on that too, just he's like, Why 12%? He's like, that's pretty heavy. I'm like, do you like 12% returns? He's like, I love 12% returns. I'm like, okay, well, you can throw money in the deal too, and you can make 12%. And then he didn't want to put any money in the deal. So we left it the way it was. But I gave him the option. I go, well, dude, if you want to put in a couple hundred grand, 500 grand, we could just cut this down the middle. You can make the 12% too. And then that objection went away. So see, this Nicole says, how are you getting 43% on cash is showing 78% so? Okay, so Nicole, let me pull that back up. So Nicole, the cash on cash return for this deal is 73%. That's if I don't, or 78% right here, if I don't have an operator. So if I'm just running the project and if I could hit the deal for his budget and his time frame, I would make a 78% return.
Oh, got it. So that's still on the full 1.4.
That's on, yes, that's on
Okay.
his model. Now, if
Right.
I go to what I kind of got quotes for, my numbers were going to actually look at this, like this. And so my return, the way I can operate it, I was going to be at 58%. So by bringing him in as an operator, the
Right.
deal went from 58 to 74 already.
Right. Okay.
And so you guys, that's why I don't mind giving away half. He's enhancing the deal day one of him walking in. Now, if I can get this project done for 1.3 and he's at 1.3, there's not a whole lot of benefit, but my true cost were 1.5 plus on this house. And that's what we have to do as operators, like you guys, I flip a lot of houses and I'm good at a core group of houses. That is what we try to focus on. That's where people want to invest with me because that's what we rip, and we're good at keeping on the budget. We're good at moving them. But if I'm doing something a little different and I'm more inefficient, I got to get different quotes, right? Like my generals might not be good. Like if I go try to take my generals in Seattle, bring them down to Tacoma, I'm going to be way over budget. And so for me, I'm going to pick the operator that's better in that market and not move my guys down because then they can focus on what they're good at doing and I can keep a tighter budget. And so that's what you guys always want to do. Input your numbers. How can you operate it? Input in the operator's numbers. Do they make it more efficient? And then you can work that split off. And you guys, again, when I got done looking at first, I was like, dude, am I really giving away 600 grand, 700 grand, 50% of the profit? And once I looked at the math, I was like, hell yeah, I'm doing this. This is a no-brainer for me, right? And that's why we built that sheet. Let the math speak for you. And now you guys, and I did have to drill into this guy, like, what's your schedule? What are you building right now? What do you see as a hiccup? What do you need from me? We clearly defined it. He's like, I need a floor plan and I need all the design specs and I need them bought out right away. He's like, if you slow me down, I'm going to get pissed at you. I was like, I won't slow you down. You keep moving forward. Right. And so we set that all up. And once we're like, so now I know what I need to do. He knows what he needs to do. And that's how we get it done a lot quicker. So Jason says, I'm fascinated how you structured the deal, but efficiency. You guys, that is one of the biggest mistakes I ever made in life was not looking all at the profit, not looking at my time. What is your return on time? And, I always say the hardest deals you ever do are the ones, the deals that are the hardest are usually like, I'd rather do a very easy deal and make a little bit because my return on time is a lot better. When you have to go out to projects and you have to constantly go out there, shift the plans, right? That's where your time gets diluted, right? And that's where I expect to make less on those because I don't have to go there much. Like if we have a split level house in our neighborhood where we have to maybe add a bathroom and open a wall, I go there one time, my team takes over from there. That's a great return on time, even if the margin's slim. If I have a tough house, like, and Jason, this isn't any shit to you. I bought a house and it's a tough house. We opened up the walls. There's steel beams in the walls. We did not know were there. There's load points coming in. I had to go out and, like in 24 hours, I was at that house for 4 hours, remeasuring it out to make sure the plan's right. And that's okay. That's what we bought. But the return on time versus a split level one, I have to factor that in. You want a bigger margin on that, right? And so that's how I'm, that's where you really have to ask yourself, you guys, like, how much time is that giving up? What are you losing? If I have to go to a house 10 more hours, what can I do with that 10 hours? Can I source 2 deals? Can I source 1 contractor? What can we actually do with that? And, I will say, even though I gave away 10% to this guy, I'm going to make way more in the long term, because by me not having to go to California and manage that site a bunch, I guarantee you I do at least 5 to 10 deals more in Seattle by having that time. And so that's, again, those are the things we want to kind of beat into our brain. Donald, yes. Can you get a copy of this calculator spreadsheet to give to prospective cash and cash investors? Yes. It's in the tools for you already, the partnership. It's under the partnership calc right there. Oh, I can't hear you, Don.
Sorry. I'm not a full subscribed member yet.
Oh, you can't get it until you're a member, dude.
Okay.
Yeah.
I wanted to put that together for you for that property in on McGraw.
Oh yes, yeah, that's right. Yeah, it's we can't give out our that is. I actually built that calculator because someone asked me to on the call, and we built it right there on the spot. So that's the stuff that's part of the group.
Gotcha.
Yeah.
I can't do that quite yet.
Yeah. No,
I need to
all
get
good.
that first deal going.
Yeah. But go. All right. Oh, Sergi, I see your hand popped up. Oh, actually, hold on. Before Sergi, I'm going to hop over to Nicole's to finish. This is, how do you structure in case of a potential loss? Would the contractor also be responsible for an equal loss? No, in the deal, how it works is I'm responsible for all financials in this deal, you guys. If I'm the passive investor, I'm putting up the money. It's my money on the line. If the deal goes bad, it's my loss. It's his loss of profit. But what he has done, if we went through a total budget on this project, he has committed to all the labor costs and that he can do all the installs for what we had put in. So we made a budget for everything. I gave him all the material allowances. If we go over budget on the allowances, that's okay. We'll both approve it. But if he goes over on the labor, that does come from his it comes from his side of the profit. So for example, he said he can do the pool without the hardscapes around it for 50 grand. If he goes above the 50, it does come from his side. So we did fix all the numbers on that point. So he's risking his labor rather than his capital. Alicia, are there penalties if he misses his timeline? There actually is no penalty, because the penalty for him, let me show you, is because he's tied to 100% of the performance, you guys. And the number he's giving me is very close to cost. I would say most generals aren't hitting this number right now there. And so what I always do is when we're going over this, we emphasize time. Because his time frame here, this contractor, if he gets it done in 6 months, he is making roughly $600,000. If he gets it done now in 9 months, he's now making, did I just break something? I did. If he gets it done now in 9 months, he makes $120,000 to $130,000 less on this deal. And so he's very, very motivated for him to get it done quickly. That's also why I put the pref return on there, because if it goes longer, I'm charging him 12% interest for my money too. So the longer the deal goes, I'm still making the 12% on my money. And so it starts beating up him. So the penalties are more in the partnership. Alicia, what I have done with some other general contractors, this guy's a little bit different because he's so reputable. The contractor I was going to hire, we had it based on equity as a tier. And because I was a little worried about him being dependable. And so he basically got 50% of the equity if he got it done in 6 months. If it went to 7 months, he got 45% of the equity, or it went to 40%. And then if you got it done in 8 months, it went to 30%. And so the equity percentage dropped with the months that are over. And that's another way that I've done it. And that does work well. You know, so I like to dilute their equity based on their time frame.
That's helpful. Thanks.
Yep. And then Sergi, and then Sandra, I see your question. Am I worried about the market? I will open that lid in a second.
Hi, James. Can you hear me?
Yeah, what's going on, bud? How are you?
Good. How are you?
Good, man.
So last Tuesday we talked about one of the guy that thinking to invest into real estate, and he was asking me what is the deal gonna look like if he provides all the money is gonna come in all the cash, buy all cash, and how is the deal gonna look like for him, and what's gonna be his return on his investment. So if we're gonna go 50-50, his ROI looks low.
Yes, it does. Did you ask him what he wanted to make minimum on his money?
Well, he's kind of new to this, and he doesn't really know what he wants exactly. But from what I see, it's kind of low. That's why I was wondering what is the solution in this situation, or how we can do it to make it work for him and still be okay with me as well.
But he hasn't said it's low. You just see it's low.
Yeah,
Okay.
but
So
I'm just worrying at some point he's gonna bring it up.
No, it's good
And-
to, you know, I think this is exactly what we want to do. You guys, to recap, Sergi has a cash investor. He's not using leverage. He wants to pay all cash for the property. You guys have already kind of talked about splitting the profit, right?
Yeah.
So what Sergi's trying to do is go, okay, well, what kind of deals do I need to do to make it attractive to him? And, you know, because what he's kind of looking at, I'm going to pull up the spreadsheet again, is let's put in a deal. What's a deal, Sergi, that you're in right now?
Well, I have one in Seattle, split level. Purchase price was 805. And ARV 1 to 50.
What do you think your rehab is?
Rehab is 150.
And how long do you think that's going to take to do, start to finish?
Remodel is gonna take us about 2.5 to 3 months, and sell depends on market.
Okay, so let's say
I'll probably
6
be
months.
in and out like 6 months.
Okay, 6 months. All right, so let's fix your annual insurance. This is not going to be right. Okay, and then he is, so on this calculator, guys, we don't need to worry about because he's paying all cash. So you're going to go 100% financing on this. Okay. And then wait, staging's not, it's going to be more like this. Okay, so well, this is a good deal. 805, 150, 1250.
Yeah.
Okay. So if the investor's going to have to come up with, and this would be this box right here anyways too, right? Cash. Actually,
Yep.
you know what I want to do as a good scenario? All right. So if I want to look at this kind of organically both ways, you guys. So if Sergi brings in this investor, he's at some of these numbers. If he uses hard money financing, like should Sergi also bring this guy as a partner? I'm going to kind of take this both ways. If he gets a construction loan, does 15% down loan. He's looking at, after all costs, that he's going to make $161,000 on this deal. He's going to have to come up with 200 grand, which is an 81% return. This is a great deal, Sergi.
Yeah, that's a good one.
Did you get this from us?
No, for someone else from Wholesaler.
Hey, the good wholesaler keep. So 161,000, 81% cash on cash return, great deals. Now, he also has this investor and he wants to scale, and he goes, okay, well, how much the investor though is going to bring in all the cash on this deal. So how this is broken down is for all the cash, and you're not charging any fees for, you're just doing yours at cost, right?
Yeah, well, I'm gonna be managing it and do like remodel,
Yep.
and manage the project, and we're gonna be like 50-50.
Okay, 50-50. So the investor has to come up with a total of $963,000 to do this deal if he's paying cash.
Yep.
If Sergi gives him 50%, the investor is actually making $105,000. And the beautiful thing is, because he's not using leverage and setting this deal up, is Sergi's making 105. So he's losing 60 to be able to do another deal with another investor, right? So like this actually makes a lot of sense for sure. Plus, he doesn't have any stress of like the market, the timing, the debt cost. But for this investor, this is not a bad deal, because right here, he's coming up with 963. He's going to make 100, and he's making a 10.95% return in 6 months. So that's a 20% annualized return. And so this is a fairly good deal for someone that's in all cash, that's that quick. 20% annualized is good.
Okay.
And, and so the investor though, like how I would talk to him is I wouldn't even, if he doesn't know what his return is that he's looking for, I would just say, hey, look, I would show him this deal, like, hey, this deal right here, you would have came up with 963. We're going to run the construction. We're going to run the project. We're going to get in and out in 6 months, and you should make $100,000 to $110,000 on this deal in a 6-month period. Because that sounds
Okay.
good.
How about if the no, that sounds really good. That sounds really good. But how about if the profit will be a little bit less, and his percentage will be like, instead of like 10%, is gonna be like 6%.
All right, so let's say it sells for
Or
1.2 instead.
1-2, yeah.
Yeah. So 1.2, then it's, hey, investor, you're putting up 963,000, this number right here, guys. After we run the project, after all costs, taxes, insurance, selling cost, we should be netting out around $80,000 to $85,000 in profit. And then I always roll it into, which is $80,000 to $85,000 in profit in a 6-month basis, which is going to be about a 16 to 17% return on your investment. Because I always look at annualized, how fast are you going in and out?
Okay.
And so, because 16%, that's a good return. And so
Yeah.
when I deliver
So if you're gonna do some,
say again.
yeah, if you're gonna do similar projects, two projects a year, his annually on his money.
Yeah, and
Right?
the reason I bring it up that way too is, hey, you're making 82,000 in a 6-month period, which is an 8.5% return or 16% annualized. So that way, when I'm talking to him about a small deal later, Like, let's say you're buying a house for 350. I want everyone to pay attention to what I'm saying right now. This is important. Let's say you can buy it for 350, put up 75 and sell it for 550. Got it. Hey, investor, you're gonna have to come up with $432,000 and you're gonna make 42 grand. So sometimes people hear the 42 and they're like, oh, that's not that much money, right? It's 42 grand. But it's, hey, you're coming. That's why I always roll in the return too, because that's the real number that's important is, hey, investor. So like on a smaller deal, he sounds like he's making 80 to 100. That sounds a little bit sexier, but he's
Yeah.
making only 16% on his money. On smaller deals, I'm going, hey, you're putting up 432. The estimated profit is around 43,000, which is going to be a 9.72% return, which is roughly 20% annualized. So this is actually a better deal for him working his money than the bigger project, but it has a less sexier number at the end. And so I always say, you guys, here's the profit, which is a projected annualized return of this, because really, if you're an investor, you're taking a dollar and you're trying to grow that money like at a fast rate. Like if you're going to the stock market, you're going, hey, I want to make a 6% return or 8% return. That's how investors think. Flippers think differently. They're like, how much profit is there? And it's a big, big mistake. And so I train the investors as I'm looking at deals because that's really what they should be concerned with. When I'm an investor, I'm looking at my cash on cash return, not the profit as much. How much money goes in? What do I get out? And so every time that I deliver this message, you guys, it's here's the estimated profit in this much period. The annualized return is this projected. Because it starts training them on a deal that maybe they're only making 20 grand on, but maybe they might be making a 45% return and they get trapped on the 20 when they really should be looking at the 45%. So I always roll in that number. And the more you talk that way to them, the more they get used to it. And then that's what they actually get excited for. And again, you guys, I learned all this when I was buying with hedge funds back in like 2012 to 13. I'm like, oh, this is why these are hedge funds. They make a lot more money than us because they don't care about the profit. They're looking at money out the door, money back in, how fast are they growing? That's where you actually make the profit. And so when we talk to our investors that way, it's really the right way to be looking at it and they get used to it. It's not profit because sometimes, yeah, 25, you're like, I'm gonna make 25 grand. Is that really that cool? Like, I mean, it is cool because it's 25 grand, but they hear their friends make, they just made 100 grand on this house. That's so much money, but they had to invest way more into it and it took way longer. And so, you guys, when we look at annualized return, that's my checkpoint for maybe a slim deal that I can turn in 60 days actually might be better than a big fat deal that I can turn in 12 months because I'm in and out, in and out, in and out, and keep recycling the money. And so, Sergey, I would just deliver it to him that way. Just take that deal and go, hey, this is what you would make profit. And if he's going, oh man, I need to make double that, he's not your investor anyways at that point. Then it's just, it's because you're not going to get a deal that good. That what you have is good. And if that's not good enough for him, we either need to reset his expectations or he's just unrealistic in general.
Yeah. And I can always represent like a couple projects that I have done in the past and with the numbers, with actual numbers, what I bought it for, how much rehab, what I sold it for, and the actual profits so they can kind of see what's potential.
Yeah. Yeah. And if he doesn't think that way, I just run the numbers and go, just break it down, profit. Here's your return, this much basis, annualizes this. Because
can we run this scenario if we would get like hard money and he would do all the financing?
I love this, you guys. Sergey's asking all the good questions, you guys. This is, so we're gonna jump in. I'm gonna answer this right now because it's gonna make the world of difference in this deal. Like I always use leverage on the deals because I can give my investors a lot higher return. Now some investors that are really well funded, they just don't like debt, and that's okay. They're like, you know what? I'd rather just not have the risk. So when we look at Sergi's deal, let me put those numbers back in. It was what, 850, right?
Purchase 8 to 5,
805.
150 for rehab, and 1 to 50 is projected the ARV.
Yeah. So with if Sergi does the deal by himself, he needs 199,000. He can make 161 in profit. His cash investor, if they're not using leverage, has to come up with 963,000. That's a lot of money. When they sell the property and he makes 105,000, that's going to be 11% return in 6 months. So it's a 22% return. Now, if the investor, though, uses leverage instead, because the investor might not have 963,000. If Sergi called me up and goes, hey, James, I got a deal for you. It's 963,000. I'd be like, sorry, Sergi, I'm out. I don't have the money for that right now. Not for a 20% return. I just don't have the means right now to do it because I just tied up a bunch of cash. And if I'm putting that much money in a deal, I'm like, that's a lot to hedge into one deal for 11%, 22% return. But if Sergi calls me and goes, hey, look, I got a deal, if he sets it up with a construction loan for 85%, he's bringing in now his equity partner for the 199. That's over here. The investor now makes, because he's giving away 50% of the profit, the investor now only has to come up with 200 grand instead of almost $1 million. That's a huge difference in attracting money, guys. When the investor's now profiting, they are now making 81,000 instead of 106. Because there's hard money cost and everything factored in there, right? The profit went down. Profit went from 211 with no leverage to 161. But the investor's return explodes. They're coming up with 199. They're making 80. That's a 40% return on their investment, which is an 80% annualized return. And that's how it makes it a lot easier to make money. So if this investor, Sergi, he's going, yeah, I like the 100 grand, but if I'm only making 11, I'm making 8% in the stock market right now. I just don't know if I really want to risk that. That's okay. I don't blame him. It's slow, steady. He knows it. Where if the investor goes, hey, do you want to make 80 grand? You only got to bring 200. That's a 40% return. He's not making 40% in the stock market. Not unless you buy the right thing or the right thing to buy, typically. That's how we attract more money of going like, hey, and that's the next question. How much cash do you have right now? I have $1 million. Well, we can do one deal at a time and you're going to make a 10 to 11% on your money. Maybe we shoot for 20% annualized. Or Sergi could actually take this one investor and do 4 projects with him. And now Sergi's now making 4 times the amount of profit on these deals. Plus, you guys are spreading out over different deals. That's actually less riskier when you're in different price points, right? Sometimes this price point's slower than this one, so it balances out. As an investor myself, I like investing in numerous different types of deals because some are going to hit well, some are going to be flat, and some are going to do not great. And so it blends it together. But most importantly, now Sergi can do more transactions. And the investor's actually making 3 times more because they're making a 40% return instead of 10. And so it's a win-win. And then Sergi, what I would do, you guys, is, volume now. Sergi has 4 projects going on with this guy now. That's a lot more work. He's got to staff up. That's where I would build in like a project management fee on here. And you can still do the 50-50 here. And let's say you charge a 10% project management fee on the deal. Sergi, you're now making an extra 15 grand. The investor is making 73 now, but they're still making a 36% return. And now if he's doing 4 deals at a time, Sergi's now making roughly $60,000 to $70,000 more on doing the exact same amount of deals, which allows him to scale and grow. And so that's what I want you to kind of play with, Sergi. As you talk about the return numbers, go over the cash. Hey, this is kind of what it would be, cash on cash return. If you want to use leverage and we do a couple more deals, you're making a 30 to 40% return. You're making a lot more, and then build in that little fee for you because it helps. It's not just to make money, it's so you can actually hire up people and make sure it's efficient. Because once you start
Yeah.
doing 4, 6, 8 at a time, you got to have more people. And so Sergi now can charge the investor a fee to grow. The investor's now going from 10% to 36%, and then Sergi's getting deal flow and keep him working, and he has less people to work with. It's a win-win across the board for everybody. And it sounds good.
Now this
You wanna make
looks much healthier.
Yeah, shit, 35% returns, great, right? Like that's,
Yeah.
you know, but don't shortchange yourself, you guys. I made a huge mistake where I was not charging for my operations as much, and I was just getting equity, and that's where you run into bottleneck for growth. And so, you know, we charge some fees because we have to, just to protect the investor's investment, just so we can run efficient.
Yeah, and now with the flips I manage myself, I can do about 2 to 4 projects at a time with confident everything on time. But if I gonna get like 5, 6, then do I just like find a general contractor and just give it to general contractor, or because I won't
There
be
is
able
risk in,
to
there is risk in that, because what if the general messes it up?
manage more than 4 at a time?
What I would say, one of the best ways to grow on that is going to be if you're charging more, right? Like let's say you're doing 8 at a time and you're making a fee on there. That's going to give you right about $100,000 to $120,000 a year in salary that you can hire a really, really good project manager super to help manage that. The other thing that I would do, I've talked to a couple operators in here where they're trying to scale, is you can bring in some generals, but audit what your guys are the best at doing. Then let the generals come and do the, you know, so I give away, like on my projects, I give a general like 50 to 60% of the project. We plug in the other 40%, the cabinets, the countertops, the paint, like, and so there's a blend to where you don't have to give as much to the general, because what you don't want to happen is you hire the wrong general, they go off the tracks, and then they're looking at you as the operator going, what's going on? And so I don't
Yeah.
like to give out the whole thing. And so I bring in generals for what my guys aren't that good at, and then we hammer out the rest so they can be efficient, fast, and it keeps my costs down.
And that's a good idea.
Yeah.
Yeah,
Bundle
it's gonna be easier to manage that way.
Yeah, because there is, you guys, there's a risk when you start hiring. I've had numerous generals blow up on my clients. It sucks.
Yeah.
It's there is, you guys, 2000. Oh man, this is the worst
I
one
had that.
ever. Yeah, 2014, or it's like 13 guys. One of my long-term clients, she would go way, way back. So she wasn't mad. We hired a general contractor. Guy had worked for a ton of projects. He blows up in the middle of the project, gets us red tagged. He's having money problems, disappears. I then hire a replacement contractor. 3 weeks in, he blows up on the job site. So we literally had 2 contractors walk off with our deposit. And these are guys I've known for a long time. And they messed up the project. I had to bring in a 3rd contractor to manage. And it was a complete disaster. And that's when I stopped giving generals the whole scopes. We controlled a little bit more for less liability.
Hey, Jim,
Yep.
just curious, you know, I've had that happen, and then I have issues with escrow because they want to know how these generals were paid and if you got signed letters from them that everything was complete, but they took off.
Well, so when we sign our escrow docs, we are the general contractor that goes on, and we say we paid all bills.
Okay.
And so we can kind of sort of, you're talking about the identify, where title's asking you to basically warranty the construction payments.
Correct.
Yeah, and so because we can comfortably sign off saying everyone's been paid in full and we're the general.
Okay.
Good question though. And yes, when you get those forms from title and escrow, don't overthink those too much. Like you either paid the people or you didn't. And if you paid them all, don't even worry about it. And if the title company, you guys, is asking you for receipts on everything, switch title companies, you guys. Like if a title company asks me for that, I'm like, no, well, you want us to pull all this information, just please close the file. Like we have no liens, we have no titles, we gave you our lien release. There's plenty of escrows that will. Like I don't want to spend 45 minutes or have my accounting team doing that just because they need it. Fidelity National Title, you guys, that's how I use. They don't require that. So, well, they asked, I said no, and then they changed their rules, I guess. But you can always push back on that stuff, you guys, if it's burdensome. Just make sure you're telling the truth. I sold a property that we do have an outstanding bill on that we're disputing, and I just wrote it on there, say, hey, this is what the dispute is. We're handling it this way. I talked to the title officer, and they're like, hey, you know what? We're good to close the deal out. And so they closed. And so just always be transparent, but it's pretty straight over tackle. Donnie, I saw you had your hand up, but you're also in commute, so you want to do it when you're not walking?
No, it's fine. I was just gonna add on to what you're saying, but I threw it in chat. It's just like contextualize your money for your investor. Like, what else could you do with it? Is a really helpful way to frame it, and that's how I've framed it with my investors in the past. If they can like beat the returns that you're giving them, then great, they should go do that. But the likelihood that they can do that is low.
Yeah, and you guys, that's also a good time, like with investors. I'm like the most pessimistic operator. I'm like, hey, look, the reason we're making 35%, we're targeting it, this is high risk, because you guys raising money for flips and anything that you can make a 30, 20, 30, 40% return on, it comes with risk. And so just always be transparent about that too, because it is important when you are partnering with someone too, like setting a tone. When I'm bringing in that operator in Newport Beach, hey, this money's expensive, and if you mess around on this project, we are not making money across the board for all of us. And we committed to that timeline. If someone's going to put money with the deal, I go, hey, look, this is a 35% return. This is a good deal, but this is what can happen, and this is what we do to mitigate it. Like, always disclose. I'm seeing a lot of chat rooms in like bigger pockets. And people took money, and I don't think they properly disclosed the risk to that, and people are unhappy. And you guys, what we do is high risk. It's very, very rewarding especially if you do it right. But there is risk in there. And so anybody you're taking money from, you guys, they should understand that risk. Like I take money from very few people because they got to be like-minded. Because markets go up, they go down, they go weird, and you just don't know what could happen. You could hire the wrong contractor, you get stuck with the wrong permit, and they just need to understand those risks. And if they don't, you guys, honestly, I try to use them as hard money instead. Say, hey, look, if you don't really understand this, why don't you just make a guaranteed rate at 10, 11, 12%? Because that's more of a guaranteed rate to them, hence why the return is lower. And so those are important conversations to have. And plus, you guys, sometimes they don't have the stomach for it. And they're like, oh, but I can make 10% guaranteed. Cool, I'm in on that. And so you actually make more money as the operator, and they're getting what they want for their risk appetite. See, going through. Alex says, I need a motion sensor light for the side yard. Anyone have suggestions? Whatever's on sale, Alex.
Okay. Do you put like a kind of like a fog light normally or something else?
I mean, ours are pretty just kind of basic fog light ones.
Do you
For
put
the
those
side
on the
lights.
side too?
Yep.
That's all. Okay, cool.
Yeah, I don't put those on the front of the house,
Yeah.
but yeah, those are totally fine.
Is there a reason you don't put it in the front of the house?
I just don't think it's needed as much because I like to do other type of illumination. Like I'd rather put like sconces on both sides of the garage, more lighting, like more like ambiance lighting. And
Yeah.
the spotlight kind of takes away from the ambiance sometimes when they're pulling up at night.
Yeah, yeah. Okay.
It's but sometimes we even throw in like an Arlo system or something in our houses, and that comes with the spotlight too.
Okay, okay.
But
Okay.
you don't need to do that. but we have done that in the past.
Okay, good ideas. Thank you.
Yep. Alicia.
So I was kind of studying the calculator last week and I had a couple questions. When you have in there staging costs, but then I think is it one of the fees, is it the disposition fee? Do you do like one or the other, or do you do both? Like I wasn't really sure how to think of like what the disposition fee is.
Okay, so the disposition fee, so I don't personally charge those. But that doesn't mean that operators don't. Typically we are doing the listings anyways, and so that's kind of in that fee for us. But many operators, actually, you know what? We do charge a disposition fee when we're selling a syndication apartment building. Because a lot of times we're using a commercial broker to sell it, and we charge a 1% disposition fee. So what that is, there's the sale, but what operators classify those is like prepping it for sale. Like they're just saying, well, hey, I had to interview the agent, hire the agent, negotiate the commissions down on there. I had to get the staging. I did the pre-inspect. It's all the prep for the sale, and so that's why people charge for it. And I would say, like in the syndication world, it's pretty standard for a 1% disposition fee.
Okay.
I don't typically charge those. I'd rather charge them, if I'm going to charge for anything, we charge for, like, we keep our fees kind of relative because we kind of make them more in the acquisitions when we're doing it. But typically, like, we charge a 5% construction management fee because I have staff that I got to pay for. But then again, if we go over budget, I actually eat that first 5% first, and then it goes. And so, like, that's only if we hit the budget. And so you can kind of play, but typically I would say like more things that would be more standard for like our flips, you guys would be like an acquisition fee. Maybe it's 1% because you underwrote 35 homes to get to that deal, right? You have a lot of time elsewhere. You might charge like a 0.5 point lending fee because you went and shopped out 10 different lenders and got you the best rate possible. Construction management, you spent time to manage those people, and so 5 to 10% works there too. Those are the most, I think, reasonable fees. The dispo on a flip gets a little weird.
Okay. So then would you, assuming you're not going to charge the dispo fee, would you charge them the staging so that you guys split the cost on that?
The staging, yes. So the staging is still 50-50. That comes off the profit in the deal, regardless,
Okay.
on that calculator. And then, the person bringing in the capital, they're the ones paying for all the staging. That's part of their cash out of pocket.
Gotcha. Okay. No, that's helpful. And then you also had in there just like other closing costs. Those are just the typical, I assume you just put in 1,200 as kind of like an averaged amount.
Yeah, and that just depends on the state you're in too.
Yeah, that's what I thought.
Like we have a low closing cost in Washington because we, us and our clients, we get a really good preferred rate with Fidelity. But each state's so much different in closing costs too. Like California's closing costs were actually a lot cheaper percentage wise than Washington when I was selling. And
Yeah.
so you just have to kind of adjust it per state a little bit. And you guys, the best way to do that is you can always ask your title company and your escrow company what's your standard cost for averages, and they'll tell you.
Okay. That's helpful. Thank you.
Yeah, because you guys, every state is so different. Like in Washington, we have a tiered excise tax. So the more you sell your house for, the higher excise they charge you. If you're above 1.7 million, you get charged 2.75% on the excise. If you're below 1.5, it's like 1.38. California has a low, barely any transfer tax. And so they're all so different. And so you guys, your escrow officer can always break every one of those costs down for you.
Okay. Perfect. Thank you.
Yep. Sergey, I still see your hand up. Were you done, bud?
Hey, James. I got disconnected. Wi-Fi, I think, gave up on me.
Oh, no worries, no worries.
Yeah, I had one question, and I wanted to thank you for helping me with this one. So at least I will have like a couple options for investor to look at and have him decide what he wanna do.
Yeah, no, I mean, and you guys, the motions that me and Sergi just went through, that's what I all want you guys to practice. Like, take a deal you have now, throw it in your calculator, what looks attractive, and you kind of, because now Sergi going into this meeting, he's going to feel a little bit more comfortable with like he's not just going, hey, do you want to split this 50-50? That's how you will attract a lot more money.
Yeah, I mean, it's much more confident.
Yes. And then you're also not going to give away too much either.
Yeah.
You just said
exactly.
you can do 4 to 5 projects comfortably at a time. That means you have a cap. So you want to make sure it's making sense for you too. And if it doesn't, do a different deal or a
Yeah.
different investor.
Definitely. And one question I had, I uploaded floor plan in the chat. That's actually the project, the Seattle project. Yep, that one. So I scan it with the Cubicasa, and measurements are approximate. But we are thinking to add one more bathroom over here upstairs. This is split entry house. So we're thinking to add one more bathroom over here and kind of debating what's going to be the best location for the bathroom.
Cost wise, you would space wise, I would put the bathroom in the bedroom this 9. I would create, or wait, are you you're creating a master, right?
Yes.
Your bedroom is 8-9 by 9-8. It's kind of a weird size bedroom.
Mm-hmm.
You know, usually I want to keep my bathroom next to this other bathroom here because it's cost effective. Because you can kind of stack in your plumbing, bring in your bathroom, do a walk-in closet, and then you turn this bottom bedroom 10 by 13 into your primary suite. So these two kind of become your primary.
Okay.
But then you have this weird shaped bedroom here. And this is going to cost a little bit more. I would turn bedroom this 10-2 by the front one into your primary and turn your bedroom closest to the stairs into your bathroom closet, because then for your sellable footprint, your 2-bed up, you have a nice big bedroom, a bathroom, and then you have a big primary suite. So it's a lot more sellable. If we chop up the other 2 bedrooms, you're stuck with the little bedroom unless you want to reframe all this too. So I feel like you're going to reframe a lot more.
Yeah, I mean, yeah, there's definitely some reframing, and more or less my main thing is to keep all the windows same location and save a little bit on the plumbing to make sure it's not getting crazy expensive.
And yeah, so I think that one right there is going to give you the best. You can see my screen right now, right?
Yeah.
Okay. I'm sure I'm in the right one. So you guys, if we go, there's a couple catch 22s on this. So we can put the bathroom here. It's going to save the most amount for plumbing. The shorter you get, but then one of the issues, like what he just said too, was with the window, he doesn't want to move his windows. And so there's no way for us to get a bathroom comfortably in here. You might be able to bring it over this way, but your bathroom's going to be oversized and your bedroom's going to be small. And so what I would do on this is I would go this bedroom here, because this is going to weigh out fairly well with this bathroom window here too. And because he has 8-9 by 9 here, we could roughly get in, because he's got 10 by 13. 13 is probably up this way, maybe. Is that?
I think so. I think 13 is that way.
Okay. So it's really like a 10 by 11 room.
Yeah.
Okay. So he can leave his room. This is 14. What I would do is I would frame this in, Sergi.
Mm-hmm.
I would demo this out because this is not load bearing really right here. Then you get a nice square primary. Your primary now becomes like a 12 by 12 in here, or 12 by 11. So it feels good. And then your bathroom is going to run because you have 9 feet by 8. So you can get a 5-foot bathroom in. So this would go shower pan in this section. You get 5-foot shower. Then you do a toilet next to that. This will all fit because you got 9/8, so it's good space. And then the good thing about this is you got a good footprint to work with. Sometimes it's a little small, but so if you go over, you still have roughly, honestly, I'd probably make this 5.5 feet, this bathroom wide. So you get a little bit bigger shower. But your closet's going to be 4.5 by 9, and you can run a big rack coming through this way. And so it's a good sized walk-in closet too. And then I'm going to bring my primary bedroom door here. And because you have 14 feet off this wall, it's really long, I would run my closet on this section. So then your bedroom is 9.5. It's a little tight, but you're still 12 feet long, big window center. And then you kind of come in your bedroom to about a 12 by 12 bedroom. Then you got a big walk-in closet with a door swing and a shower that's not too tight because it's 5.5 feet wide with a toilet and probably a 48-inch vanity in there.
And that window in the bathroom, like new bathroom, will be like, I think on the cubic acid it's made it a little bit smaller, but I honestly think it's like 5 by 3 window, 5 feet wide and 3 feet.
This one right here?
That one. Yes, yes.
You know what though? It's your 5 by 3, but because your utilities are on this wall here, it's gonna feel good in here because you're just gonna have a nice big window. And then is this the front of your house?
Yes.
I would just put a frosted film right over it.
Okay.
Or blinds. I actually a lot of times will just throw blinds in because I don't like the frost on the front, but I actually think that's a good thing. It's gonna feel a lot bigger with this window coming through.
Okay. And is it even because I was thinking to do it other way, do the closet where the window is, and then bathroom where the closet is right now.
Yeah, and you could do that too.
There's gonna be no window in the bathroom then.
See, that's why I like to have the window in. If it's gonna save you a bunch of money on your plumbing and moving things around, I'd probably swap it. I just like having I like having the window in the bathroom, and then plus if I can use any kind of walls, the window kind of messes up your wall space a little bit in your closet.
Yeah, we're probably gonna keep L-shape shelves, same thing, just exactly the same thing, but just swap it. Closet with the bathroom.
Yeah, and I think it's fine either way. You could do
Okay.
either way. My preference would be the window in the bathroom just for natural light, allowing it air it out, ventilation.
Yeah.
It seems like that's typically what people prefer. But if your plumbing runs too long and it's cheaper, I think you're fine to swap it anyways.
Okay. Yeah, I'll make that decision tomorrow. I'm gonna be there tomorrow morning, so I'm gonna check everything. Go ahead and do framing.
Yeah. No, it's good.
Okay.
Nice square box. Those are the best ones.
That should be easy one.
Yeah. And then you can probably cheat your kitchen over a little bit too, dude.
Yeah. Well, so this wall is not load bearing wall, so I'm gonna take it down and then go a little bit closer to the sliding door.
Yeah, you'll pick up like 2 feet there, which will matter quite a bit.
Yeah. And would you recommend to keep the coat closet, or maybe you'll relocate it somewhere? Because now if I demo it, then it will be nice an open concept, but I won't have a coat closet.
You know, I don't think it's the end of the world to be able to see all the way up through there because you're kind of looking right into the kitchen. If your head height's being affected by this coat closet a little bit, like coming down, I would knock it out for sure.
It's kind of tight there.
Oh, for the head?
When you're coming down, yes.
Oh, I'd knock it out then, because then you get an open concept and better flow to your basement.
Yeah. And then don't have so then we're not gonna have any coat closet at all.
No, it's not ideal, but I can say it's an afterthought a lot of times.
Okay.
You know,
Well, I
mean,
do have in the basement under the stairs, under the flight that's going upstairs, there's gonna be nice good closet.
Yep. I mean, and you could flip the closet. You could also flip your rack into the other side and then put in but it cuts your closet short. I wouldn't be worried about I think downstairs is fine.
Yeah. Okay.
Yep.
Okay, sounds good. Appreciate it.
Yeah. Oh, I saw one
Thank you,
comment
James.
that's up. Yeah, for sure, dude. All great questions, you guys. Those were good things to go through. Sanders says, "Am I worried about the market?" You guys, that statement. Do I think the housing market's changing a little bit right now? Yes, I do. I'm also seeing it kind of come back a little bit in some neighborhoods for sure. And so when I think the market's changing, I go for higher returns. And so on this property in Newport, I'm looking at making a 43% cash on cash return. It's a lot of cash, but that's higher than my normal buy box. The other reason I was comfortable on that deal, you guys, I was originally in that contract for 400 grand more, and I was willing to walk away unless they took a 400 grand haircut before closing, which they did. They knocked 400 grand off the price, which made me feel comfortable with that return. The other reason I'm doing the one in Newport in that price point is that's kind of a sweet spot right now. Stuff 5 to 7 is not selling real well there, but for some reason, like 8 to 11 is moving, and they're kind of paying all cash. And so that's the things that we want to do. And you guys I think we're talking about this next week, like looking at data and comps and actives. I'm trying to play where the sweet spots are. And so every area that we're buying deals in, I'm going, okay, what's trading well? Where's the absorption rates highest? And every market you guys has a sweet spot, and it could be in a different city. It's all about price points, right? And so like I know in Seattle right now, a really good neighborhood, 1.4 to 1.5 is a blow where that stuff's flying off the shelf. 1.5 to 1.7 is a little bit slower, but it's doing well. 1.7 to 1.9, I try to stay clear from right now because it's just a slower absorption rate. And so you guys really, yes, I think the market is slowing down, but that just means we kind of look for bigger margins. We add extra hold times, and we look for where the absorption rate is. It says, okay, Purdy, how are you?
Hey James, I'm good. How are you?
Good.
Yeah, so I actually had a question about so when I signed the contract with the contractor, there were a few line items in his estimate that we are no longer doing. So what's the best way to manage that extra cost that was added in the original contract?
Okay, so you signed a contract with the contractor,
Mhm.
and then did you say extra? So did you say he's no longer doing them, or?
Yeah, so we basically changed a few things, and then so there's like two line items that we are no longer doing.
Okay, so you always want to document this, at least in writing. So in the construction contract that that I use, or we could use as the template, it states that if there is a change, the contractor has to send out the change. And it has to be approved in writing. Now, if it's a change where it's going down, what we do, you guys, I always you want to send them an email with a copy of the contract and just say, I want to confirm based on our conversations that line item 26 and 29 are no longer on the scope of work and will be deducted from the bill. You just want to get a paper trail on that.
Okay.
And what you should do is get the contractor to send you an updated estimate.
Okay.
That's hard sometimes with our flip contractors,
Yeah.
not paperwork people a lot of times. And so always send the email documenting it. If you can't get them to update the bid, which they probably won't, you know, what I like to do too is you can actually just cross it out on the bid. And when you're with them, have them initial it and you initial it next to it and then email them a copy of that.
Okay.
That's it.
Okay.
Yeah, because anything with changes, always get it in writing.
Yeah. Okay. Sounds good.
Did you ever get
I don't-
your measurements and your floor plan figured out? I was waiting for the measurements.
Yes, I did figure out all that stuff. Yeah, I mean, it's all going on now.
Okay, you got your floor plan figured out?
Yes, I
Okay.
had the floor plan figured out. We like did all the framing according to that. There's a lot of stuff going on.
Good. That means things are moving.
Yep, things are moving finally. Another question I had was, so I'm like basically to start the project, I moved some money from my personal account to my business bank account. Like, is there any special considerations that I have to think about if I want to move some of the money back into my personal account from a business account?
Okay, but moving from the business account back into the personal account?
Yeah.
No, you should be okay. I would check with your accountant though. But you're doing it the right way because you essentially funded your investment account with funds.
Mm-hmm.
And then you're taking the money, you're basically reducing the investment by doing that, which is okay. You're actually doing it in the right way but the money should go back into your LLC account then to you, not directly to you. Does that make sense?
So that business bank account is is on the name of my LLC.
Yes, no, I'm sorry. You're doing it the right way. The money should always feed back from the project into your business account, and then the business account goes to your personal.
Okay, so I can
Don't
transfer it from my business to my personal. It's not not an issue.
Yes, because you are originally, when you opened up that account, your personal account funded that to open it, correct?
Yes.
Yeah, so that's like your initial investment. So you're just taking back some of your initial capital. So that's okay. What you don't want to do is ever take a check from that business, you know, like something that you were doing business with, and then
Mm-hmm.
putting it directly in your personal account. Following the right paper trail is good to keep that corporate veil.
Okay. Okay, understood. One more thing I actually was thinking about when you were talking with Sergey. So we are changing all the windows in the house. Like, would you normally put blinds on all the windows or just leave them as it is?
We don't actually put blinds in very often, you know, and each market's different. I put them up if there's less desirable neighbors up though to screen it.
Okay.
Yeah, if I have like a bad neighbor or something, I don't like what I'm seeing, I will blinds the house. But
Okay. So
typically we don't you know, because that's kind of more of a negotiating thing at the end. Even in a really expensive flip in Newport, it's kind of people are used to having blinds in, but when we negotiate a price, I didn't put the blinds in because they got a price discount and that was just part of it. And so, you know, and then that way they could select their own blinds. And so I wouldn't do it. We do it in every rental unit though.
okay. Yeah. And so do you always do landscaping for your flips, or is there any time you would not do landscape?
I personally always do landscaping. You know, I would say look at the comparables and see what they had and how nice it
Mhm.
was. You know, and if they were like kind of cleaned up, mowed, edged with some plants, you can kind of go with that. I'm a big believer that landscaping gives that first impression, and I spend a little bit more on my landscaping, like having bright greens and plants. It makes it feel warm, and so I always do. But I typically will match the comps.
Okay. So yeah, most of the comps that I was looking at just had like mulch because it's a median home price neighborhood and stuff. So mostly everybody just had mulch on their front yard.
Yeah, and I think that's probably okay. You know, depending on the price point too, I'll go pretty basic on things, but it's if that's what the comps had, I would go with that. But they have like grass backyards, right?
Some of them no, they just left it dirt.
Oh, really?
Yep.
You know, right now, what I would do to keep costs down is I would, because you know, do you have grass in the back or is it just kind of bare?
It has a lot of weeds in it, but not real grass.
So what I would do, and it depends, I would talk to your broker a little bit too, like who's your buyer, right? Like I don't like having a house that someone might have kids with no yard there. And if all the comps don't have grass, then they don't. But I feel like some will. I like to not, you know, I just know you know, putting in a little bit of grass can be somewhat affordable. And so I would maybe go basic on the rest and just get a little grass patch in. Or if you have time right now and you guys have good weather right now, is you could kind of pull the weeds, put down a little bit of topsoil, spray in some hydro seed on there, and just let it grow in as it grows. Because then it doesn't cost very much. It's not going to look perfect, but it will still give you what you want. Because hydro seed is like 11 cents a square foot.
Okay. I mean, Denver is really dry, so I don't know if that will grow or not.
Yeah, if it will grow. That's
Yeah.
I don't know that climate that well there, but I mean I feel like it will grow. Put some water on it.
Yeah, I mean, like we are not there all the time to like water stuff. That's why our front yard grass is also dying.
But you know what they have? They got timers and sprinklers.
Yeah, but that's extra cost.
But it's extra cost. And so if you're looking at that's probably like maybe $300 for the life of your projects in water. Will a yard get you more than $300 is how I'd look at that.
No, I meant like sprinkler installation.
Oh no, not in the ground. You can just go buy a sprinkler and a hose with a timer, and it'll cost you like
Oh,
$75 at Home Depot.
oh, okay.
No, don't put it in irrigation. Don't do that.
Okay. Yeah, we could do that.
Yeah, that's and you guys also right now, time of year, summer, things are a little slow right now. It's really important that you have those sprinklers anyways. You got to keep your grass and everything fresh, like that first impression. So you know, you might use it for your listing down the road too. But talk to your broker if they're like, hey, no one cares about grass here, that's the neighborhood, then don't worry about it. But you know, sometimes you guys just throwing out a sprinkler will save you thousands of dollars down the road.
Okay. Yeah, sounds good. Thank you.
Yep. Well, I'm
James,
glad you're
can I
moving.
Yeah, for sure.
could I ask a follow-up question on her first question?
Yes. Yep.
So she was saying, what happens when you kind of remove items from the budget and how do you negotiate that with your contractor to get your money back? On our most recent project, we had that happen, but it was kind of a little bit of give and take. Like we nixed our wet bar, but then we added a mud room and we got rid of an accent wall, but they covered the cost of like some turf. Like there was give and take. So how would you kind of structure that so you're not like nickel and diming your contractor, but also making sure you're not being ripped off in the end?
You know, so yes, because and that's the finagle, right? The trade-offs. Um, you know what that is kind of like an adjusted scope of work in there. And I'm all about trading too. So what I would do is just type up the scope of work that's being traded out. Like, hey, you know, contractor is no longer installing wet bar for line, and then I would reference the line item. Contractor is no longer, I make a list of no longer, and then and say in consideration, contractor for same contract price is doing this, installing a laundry room, doing this, doing this, doing this. And then just make sure you put in there like for consideration for the same price. And then I just want to have it signed and delivered to them because it's all about just having some sort of signed written documentation. The verbal is what we can all get in trouble with because they're like, oh yeah, no, we traded some things around, but it still was going to be more, is what they can hit you with later. And so I just like to get in writing, and it doesn't have to be like a formal contract either. The contractor should be doing it himself, but a lot of our guys don't. I would just get it written out, have it signed by him, signed by you, and then email it to him so you have just a documented copy.
Okay, that makes sense.
Yeah, the problem is you guys contractors just like the rule I have with my project managers, anything he talks about on the phone with the contractors, he follows up with, hey, I just want to confirm you're doing this for this price, or we're trading this for this. And he always sends it in text, and then we send it to him via email too on the same day. Because it's not that the contractor's even trying to rip us off. They just forget what they say too. And so when we put it in writing, we'll say, no, remember this text that we sent you? We're right. And it takes away conflict 99% of the time. Nikki asks, would like to know more about regarding your partner's money back profit gain in business account versus personal account? Okay, so I don't, she was talking about if she has money in her business account and transferring it to her personal account. So it's a little bit different than if you're getting partner's money back, profit gain in business account versus personal. So I think, Nikki, what you're asking is, when you do a deal and you're in control of someone else's money, where should the money stay? You guys, so if we're raising capital for a deal, the money does not it goes into our business account and it stays there. Now that business account might use it for operations, paying for things, getting permits, whatever it is, and ours is in kind of a pool because it is a bigger, it's not, we don't have a bank account per property, but it stays in that account. What we don't want to do is transfer the money into a business account and then put it in our personal. Our personal is not for business operations. Personal accounts are to transfer money to either fund the business with your own money or to take a draw or a payment out, but not just to move money around. That's where we commingle funds, guys. We don't want to do that. And so, Nikki, how it works, like there's a lot of different ways that you can secure people's money and get them back their money. So when we do it, if we're bringing in a partner, we have a joint venture agreement. The investor funds the capital needed that we had committed. We spend the money throughout the project, right, on payments, contractors, and then we send them a full accounting whip on what was spent and not spent. I mean, for example, I have 3 whips in my emails right now that I'm sending out because we're listing 3 properties and we pull the whips. Let's see, I'm going to show you guys. It's actually for Dave Myerslet. Because as we go to market, I want him to know exactly what we spent on that project and where, because he gave us capital and we want to make sure that we can show him where all the money is. And so as we're listing, we send out this whip. Right now he can see exactly where the numbers are. Right now, we're looking good. We're all in at 149 and we're listing for 16. So it will work, hopefully. But so we send out that whip. When the money comes in the account, so we sell this property and let's say someone gave us $250,000 for this property. The day the property closes, within 24 hours, we issue them back their initial deposit. So if they gave us $250, within 24 hours, the money comes in from escrow, goes into our account because we're the sellers. We then issue them back the money. We do ask for 3 to 4 days to close out the profit on the deal because there's little bills coming in, there's reimbursements, and we want to try to close it out, which takes us anywhere between 4 and 5 days. Then we issue them the profit out of the deal with a full P&L and a full whip. we don't ever take that money and move it around. It stays in the business account. One simple way, you guys, for accounting, if you want, and I'm thinking about moving to this, is when I have a joint venture partner, is they're going to sign the agreement, they're going to wire in the money, but then we're going to record a deed of trust against the property for, so when the property sells, they automatically get back their deposit, their cash invested. And then we have 4 to 5 days then to process the payments, process the profit, and then send it out. But you guys, anytime you're raising money, it needs to stay in the business account. That is not for your personal use. Your personal use is for the profit, and you want to draw that out later. That's, you know, you can commingle your own accounts a little bit, but with other people's money, just definitely don't do it.
Got
Did I answer your question right, Nikki?
yeah, in some way. But my question, why I asked this question, because I cannot open the business account due to my visa restriction.
Okay.
Yeah, so if it is fine for me to use my personal account for any transaction which involve partnership, like let's say if we are making some profit and they are giving back some money to my account, or I am giving back. So, I mean, for few deals, if it is fine, or if there is any kind of legal issues involved.
Oh, no, if it's going to your personal account, because you're the one investing, right? You're not taking the money.
Yeah, I'm the one initially investing, and if yeah.
No, you should be fine because you're just making a personal investment. Sorry, I read that wrong. I thought you were talking about taking money from somebody
Got
and
it.
putting in that would be, you don't want to do that unless you're just saying it's a personal loan. But no, you should be fine. That's okay. It's
Okay.
what I was talking about, the personal and the business accounts, you guys, we just don't want to commingle funds because it pierces the corporate veil. Part of the reason we have an LLC is to limit our liability.
Hmm.
But if I take money from a flip project and goes right into my personal account, it pierces that veil because
Hmm.
it's going, no, personally, you were also doing this deal. Because you don't have that business account and you're just making a personal investment, you don't need to worry about it.
Okay. Got it.
And do talk to your accountant because I don't know exactly with the visa, but it should not be an issue whatsoever. It's like because you can go buy stock in your personal account, right?
Yeah, I mean, I can go with stocks and do investment. But since it is going to be a flip project and it will require renovation and those kind of cost will also be associated. And let's say if I'm working with a GC or an operator who is just executing the deal, later on the transaction has to be done from his end to give back some money or any kind of transaction involved. So I was just wondering if it is fine to work via personal account.
Yes, it is. You just don't want to especially if you only have one, because you don't need to protect your corporate veil at that point.
Okay. Got it. Thank you.
No, sure. Good questions, guys. You guys, any more questions? I think we got one through.
Do you have any recommendation for an attorney, James, in Richmond, Virginia?
I don't, because I haven't done, but do you do business out in Richmond?
I have rental properties over there.
Okay, so what I would do is for attorney, I'm like in all like the academies, I'm big on any time I'm going into a different market. I lean on my title reps. Like, who is the escrow company that closed your rental purchases? That's
Okay.
typically who I get my referrals from. So like when I did a loan in Arizona and I needed a real estate attorney, so when I talked to the escrow company, they referred me to the real estate attorney.
Well, I need a litigation attorney, basically. So for a E&O claim from property manager.
Okay. Yeah, that's where I lean on. Anytime I go into a new market, I always get my title rep picked first and find the investor friendly one. And typically I'm going to get my referral from them. But
Okay.
I have never done business out there, so I don't have an attorney.
Alrighty. Okay.
Don.
Yes, sir. You were gonna have a look at 405 McGraw for me and let me know if like 1 million, like 1.5 million, or maybe 1.1 was a decent purchase price on that. Were you able to have a chance to look at that?
I have not yet, dude. 405 McGraw. I'll pull it up real quick.
All right.
What do you think the rehab is on this one?
I'm thinking on the higher end. I'm thinking maybe 250 on that.
Where'd you come up with that number?
Actually, based off a bunch of your deals that you did recently.
Is there? You definitely got some tuck pointing issues on this house. That could be 40, 50 grand right there.
What do you call it?
Tuck pointing issues. Your bricks got cracking going on.
Yes, I did mention that. Yeah, and that's the one thing that I've never dealt with. So I don't, 50 grand you're thinking? Okay, good to know.
That one I get a mason out for that can vary quite a bit.
Yeah, that was the one variable where I was just not sure at all.
3,000 square feet, 2,700 square feet with a garage.
Yeah,
So I would say on your rehab, it's probably a little light.
Think so. Okay.
You're
So maybe 300 with that brick.
I would say excluding the brick alone. So like the 250, typically when I'm talking about 250, that's usually around $110 a square foot. But you're at 2,700 gross, so that's gonna be more like 270 in there.
Okay.
And then with the tuck pointing, yeah, you're probably gonna be, it depends on how bad the tuck pointing is, you're gonna be 300-ish on the house.
Okay.
Just based on what I'm seeing on how old it is. Because also you have bricks, so your window costs go way up too, because you got to retrofit them all in. And this one here at 2,300 square feet. Says down reno. Do you have a garage on this house?
Well, it's a one car.
Oh, it's attached, right?
Yes.
Yeah. And you got a pretty small yard, right? It looks like.
Yeah, it's like a 4,000 square foot lot. A small yard, yes.
There's not much grass space I saw in the back at all.
No, they kind of built it into a pretty neat patio area.
Yeah,
they bricked it out.
I think you're probably gonna be worth, so it's 3,000 square feet. Big yard. That yard's gonna be a major hit on the value on this house.
Really?
That's just a family neighborhood, and when you don't have grass, it's not great. Good yard. I mean, like, so these comps that are all selling in the twos all have pretty big yards and garages.
Yeah, I wasn't thinking it would go for 2.
I think it's gonna need to make any money on this though.
Yeah, I was thinking, okay.
Yeah, because what price do you think you can get it for?
Oh, purchase price? I think he wants I think he really wants like 1.1. But I mean, that's why the conversation with you, so I could set a realistic expectation or just walk away.
Yeah, I mean, you're probably so because if you put 1 in 300, and I'd have to narrow the comp down a little bit, but it's got to be a minimum worth. If it's not worth, yeah, the problem is when you're selling expensive and it's missing amenity right now, that's the stuff not selling very well. And that yard is going to be a big factor on this house. But you're probably, it's got to be worth at least 185 bare bone minimum for this to work because you're six, that's going to be in that range of about a 66.
I don't think 185 is unreasonable at all. I think that's very doable, actually.
Yeah, I haven't seen a house no yard yet. That's where, so like,
Yeah, okay. I will definitely scour the market more based off this information.
Yeah, because you got duplex here. You got one at 1825. That's actually a pretty good house. I lived in.
Kind of original.
But that woodwork's really expensive. Those are all fur windows, so that's like $200,000 worth of windows right there. So you guys, these are things to look at, like in the higher end market too. It doesn't look like this house here. The millwork in this property is something we don't do as flippers.
Right.
The fur and wood on this, and so I throw these out when I look at houses because I just know we can't deliver this product. The wood and the windows on this now it's not everything's not on trend, but the quality is really there. Like the kitchen is whatever, you rip that out. But to replicate that millwork a lot of times is what people are looking for, and that's like the windows and millwork on this are probably $250,000 actually.
Is this the one that's still listed, or did that one sell?
This one was sold off market.
Oh, okay.
So, you know, and that lack of yard is because if I look at this house here that sold for $2 million, this thing's all dialed in. It's 2,600 square feet, so it's bigger. I would say we're going to be fairly equivalent with 300 grand in.
We're actually 2,700 square feet.
This is 2,674. You're 27 minus the garage that's attached. So you're like 2,400 and change.
Oh, did they add that into the square footage?
That's in your gross.
Okay.
And so you're going to be more in that 2,500 square feet. It's on the same size lot, which is great. But this one does have a yard and a detached garage.
Right.
And so this yard's probably worth a couple $100,000 in this neighborhood, if not more.
Okay.
This is probably a 10% hit on this, which is going to be about 200 grand is what I would do.
Good catch.
Today's market. And so like you guys, when the market slows down, I try to avoid things that don't have sellable factors, like a yard in that neighborhood's a big deal. So we just have to be conservative. If it had a nice yard going on, I think you could hit that 2 mil number done right. But based on that square footage, just based on those adjustments, you're probably in that 1.8 range. And so it's, you know, 1.85. So it looks old. I don't think 1.1's unreasonable, but I think it's probably needs to be around $1 million.
Okay. Thank you.
Yeah. Probably kind of in that range and kind of dig a little bit more.
Okay. That's exactly what I needed, because now I can, you know, put it together.
Yeah.
All right. Yeah, I honestly, I wouldn't have even thought that the yard would be that much cost, because, and I'm not questioning you, I'm sure you're 100% right.
No,
but I wouldn't have,
no,
because
very
I'm
wrong.
down over there, you know, it seems, and I'm not a Seattle type person, I'm more from the east side where we have much bigger yards. I live here in Kirkland. Anyhow, it just seems to me like everybody's used to it, not having a yard, a lot of off-street parking over there, like don't even have a garage, unlike over here.
They're not used to big yards, but they are used to amenities. So we just got to break it down by comp. If houses,
I do have like a 15 or 20 feet off the back of the house, and it's got to be 30 to 50 feet, 50 feet, some wide. I could get rid of all of that. He basically made it, I think it's like a brick, but I could remove all of that and put in grass.
You definitely want to create grass space. That's in yard space from what I've seen in the comps. And then, people spending 2 million there typically have kids.
Yeah, so I'll definitely measure that out and see what kind of a yard I can come up with. Because I think I've got a little bit of back, and if you're in the back of the house, I think I have a little bit of property on the right side of the home that can kind of L shape it around.
Yeah. No, it's I mean, good looking. I would send a mason out to get an estimate on that brick.
Okay.
Because that's definitely going to be a variance deal. You can't eyeball. Brick can be very, very expensive to fix here.
So here's the next question. Do you have someone that you would recommend as far as a mason is concerned? Or should I just get on the internet?
You got to kind of or like go through like the permit tracking and in the resources that we go through in the education that will teach you how to pull all that stuff out.
Okay. Well, just as soon as I get this one under contract, then I'll be able to fund purchasing the rest of your program.
Yeah, it's Masons, I would just call a few out there to get some quotes, but it's brickwork is I would tell you the last couple of brick quotes I've had have been not rebuilding that chimney at West Seattle that you came to the walkthrough for. We got $11,000 on the chimney just for the chimney.
Oh wow.
Yeah, mason work's very expensive right now.
And no chance that you would want to remove that and just go with a different siding?
It's gonna
ruin it.
Well, I don't, the good thing about that is you can go with a little bit more flexible window schedules and layouts that way, but it's going to cost you the same to demo off all the brick and reside the whole, to reside that whole house is going to be like 25,000, not counting demo. And so
the demo portion we would do ourselves, but to put it back together, we would hire.
Yeah, that's just a cost thing, kind of.
Sure.
It's the comps say lap siding's fine. The good thing about doing that is just very expensive typically is you can move your windows where you want. With a brick tutor, you're stuck with the spaces because the windows.
Right.
And so brick tutors are really hard to renovate to get the right flow a lot of times.
Oh, there's difficult decisions on that one.
Yeah, it comes down to just kind of cost. And then comps, like if the whole house is brick, I'm not going to touch the brick, but the house that we were just looking at had all lap and nice. It was a pretty buttoned up house.
So you're thinking about 50,000 approximately to have the brick repaired, right?
That's a total. It could be 10. It could. That's just that we always get bids on that. We get bids on sewers, bricks, that kind, because it's just something you can't ballpark that well.
I'll definitely get the bid first to see where I'm at. But let's say it really is 50,000. Then I'm thinking, demo's my favorite day on a project. But I could, we can demo that, and then you're thinking to have the house re-sided would be, not talking about moving windows yet, because I'm sure would be doing some of that, but like just to have the house re-sided with hardy plank, you're thinking maybe 25 grand?
Yeah, I'd say anywhere between 20, 25-ish. It depends on, it depends on how much is above ground, but yeah, I'd say right in that range.
I think it's all above ground. I don't, I believe there's I believe it's all above ground. Okay.
There's a
well,
basement,
that could potentially be, there is a basement, yeah, and it's not finished. So that would be part of it, is turning that into maybe a bedroom, bathroom.
Oh, no. For your quotes, when your basement square footage on 2,800 square feet, if it's half of it's below, you save money on the siding, right? Because it's below.
Right. Okay, I got what you're saying. Yes. Yeah, we do have a basement below grade. Sorry, I thought you meant the brick going below grade, and I got confused. So that could potentially save 25,000 that could then go into moving windows and doing other things. All right, I'll get the quote.
Yeah, it just and that's kind of kind of moving the numbers back and forth and seeing how it comes out. But yeah, that the house, it's a good spot. It's definitely, what I would tell the guy honestly is, it's like there's, for his as-is condition, buying. See, I mean, there's been 5 homes in the area. There's let me show you some. So it doesn't really matter what the guy wants, because if he really wants to sell, it's will you sell it for market value in the as is condition. In this area right here, here's a 2,100 square foot house, actually very similar size lot too. You know, it's a little bit smaller house, probably very similar condition, it looks like. Unfinished basement. We got,
This is definitely nicer.
okay, so this house sold for 981,000 on market. So they paid, that seller walked with 6% less than that. So they walked with 900 grand. Why does he get 1-1?
What was the square footage on this one?
2,100 square feet.
Okay.
With a detached garage. So it's only off by like 300 square feet. And, you know, so that's the question to ask him. Say, hey, I know what you know, oh, you bought the house. So one of our Project RE members bought the house in the group.
Oh.
So
I made a huge mistake because I was comping this off a 2,700 square foot house, and I didn't realize that they had added the garage to the square footage.
Yeah, that was gross. But so then look at this one though. 4 bed, 2 bath, 2,300 square feet, bigger lot, 4,000 square feet. So better situated lot. This house has a new roof. It's got vinyl windows. It's got siding that's not falling apart with brick. Front door's been updated. This house is not in bad shape, it doesn't look like from the street. This house sold for 1-1 off market. It probably has $150,000 in upgrades over his house, plus they paid brokers to do that. So this seller walked with 900 grand as well, roughly. And so that's what you want to explain to the seller, isn't just to chase his number down. You want to go, hey, where'd you come up with that number? And hey, I don't know if I can hit that number, but if I can pay you market value, would you look at that number? Well, if you're going to pay me market, okay. No, I want above market. I want 1-1. Well, then you're not for me anyways, right? I'll move on my day. But the question is, will you sell for market value? And market value says that his house is not worth a 1-1. Because someone sold for 980 on market that was bought by investors. Another house just traded, the one we were, could you see the house that I was talking about? This one just traded for 1-1 in the area, same square footage and a better lot, 4,000 square foot lot. This house, someone put some money into it.
I don't know if I've seen that one.
And so that's the question to ask him, not how do I get to his number? It's why should I pay him this number?
Okay.
And because if there's been 5 homes sold in the area and they all have better lots than his, I mean,
I'll let him know that too. I mean, it did, he bought it 2 years ago for 850, and the same thing, they listed it for 995. It didn't sell, and then somehow it ended up down to 850. That's where he got it. 2.5 years ago.
Yeah, and there could be a reason. So it's but so why does he think it's worth 1-1 now? The market's gone down a lot, and it hasn't gone up since 2 years ago, really.
Well, the reason I've come to that number is because he came to me last year and I offered him 1.25.
But that's too much out the gate.
And yeah, and he was like, I'm just gonna stay another year. And then he contacted me again and said, hey, I'd like to look at selling it again. So I'm thinking, I guess my thoughts was, I was just thinking he was thinking more.
But it doesn't matter, because what happens, you're spinning your wheels because the investor's not going to buy it. And so it really doesn't matter what he wants. It's what can we make a fair deal with. And if I have 5 homes that, so if he's trying to make 250 grand by not touching the property, and there's been 5 homes sold recently in the 9s that net that seller 9, the number's 9 to him. Because I can comfortably give him that offer and go, hey, look, I'm paying you market value. Let's go through these comps. And that's the number he, that, or you're gonna I wouldn't even waste time on getting quotes on things. I would just say, hey, we got to talk about the value a little bit here.
Yeah, for sure. I wouldn't waste someone's time at this level.
But don't pick the number at them until you kind of know that range, right? Because it's hard to go backwards. And so, but yeah, it's probably, I mean, I probably would pay in the 9s for this house. I'd probably pay 950-ish, 975 maybe. Yeah, I'd have to look at it because
that's totally why I wanted to talk to you, because I just wanted to get your opinion on like what you would, kind of offer for this house. And then I want to just come in at the same, 950, 975 is kind of where it's at.
Yeah. I think that's probably.
And then just show him the comp. If he doesn't agree, you're
going to have a better shot of getting it done if you work the sale properly. Like, hey, it's not, hey, 950, take it or leave it. It's like, hey, you bought this property. Will you sell it for market value right now? Then he goes, yes. Okay. Why? I'm going to come out here. I'm going to give you an offer. And I'm going to show you why my offer's here. And then you're bringing them, here's 5 homes where the seller's just netted, like the one that sold for 1.1. Well, I'll pay you 1.1 if you put a new roof on, if you put new windows on, if you put new siding on, and you put new front door. Like, I'll pay what this guy did, but you got to deliver me the same house. And
yeah, because I asked him a question about the roof, and he said he doesn't know when or if it was replaced.
It's toast.
Yeah.
And that's okay. But it's not. It's just getting him to reality. If he's like, oh no, I'm a 1.1 or bust, then I wouldn't even worry. You want to move on to the next thing.
Okay. And then if I do end up there where he's just like totally not negotiable, should I offer to list it for him for 1.1 as is? And then if it doesn't sell, then go back to buy, my 975 or 950.
I mean, I don't think it's worth 1.1. I as a broker, I won't list anything unless I think it's worth the number. And that's okay. You can work at whatever angle you want, right? Like you could say, hey, we can list at 1.1 and do a buy it now price at this. But I just don't do it that way, because for me, I want to talk to the seller and be like, this is the realistic value. And because I can tell you 1.1, no one's going to buy it on market. Just on what we just saw in them as is condition.
And based off the fact that it was bought a couple of years ago and it was listed for not even 1.1, it was listed for 995, I think.
Just under that doesn't really matter. It's what is it worth today? And what the comps just told us is it's not worth that today. Or if he wants to get it to 1.1, he needs to dump some money in that thing for a second to get it like move in ready. And then if he wants to make some money, he's got to go to like next level.
Okay.
Yeah.
Thank you.
Yep. Yeah. Just focus on the as is comps, seller net off that. That's your number. Because it's fair. We're paying you exactly what those other sellers just got on market. So they tested the market, and I'm doing a cash convenience sale for you.
Right. I really like that. Thank you.
Yep. For sure, man. Cool.
I'll let you know when I get it.
Yeah, and you don't need to rush it either. Slow turn. Be like, hey man, here's the numbers. Let me know if you're in this range. I'd love to keep talking, but man, shit, 1.1, I just can't do it.
Yeah.
I'd love to go buy the house that's all renovated already. Nicole.
I had a question. You asked about like what's blocking growth. I was curious, how you get good deal flow. Like, I mean, I feel like for everyone in Seattle, they've got your team, which is fantastic. But I think the biggest blocker in San Diego is deal flow. Like the properties that I go walk that have enough margin that I write offers on, they're getting dozens, like 20, 30 offers sometimes. The fixers here, like most of them don't even hit the market, or if they do, they're getting so many
But to be honest, I think a lot of people in our group find deal flow because they're following the format. A lot of people in Seattle will say the same thing. And I definitely hear that in Newport Beach all the time. Like, oh, you can't get a deal, you can't get a deal, you can't get a deal. And then, I bought one right on market and we did really well. And we just bought this one on market. And I think it's sometimes a broker underwriting issue sometimes too.
Yeah, like a lot of the wholesale deals are getting sent. I'm like, these are awful guys. Like
Oh,
they're
they are
they'll sit-
awful. Yeah, but that's a game of just snap the number at them. Hey, I'll pay this.
Okay.
And they're god awful. Newport
Yeah.
Beach, it was terrible. I mean, honestly, Seattle, there's a lot of Seattle investors in here. They're terrible deals flying around.
Yeah.
Most people won't even open their emails anymore for off-market deals. And I think we sell a good product because we step on it numerous times, and it's and I can tell you no one's selling anything too, because my phone is burning off the hook with people like, hey, can you buy this, from people I hadn't talked to in a really long time too, and I'm just training them how to reset their numbers, and they're definitely trying to get their numbers down. But yeah, it's terrible. You guys, the off market has become very, very bad the last 3 years. It's just not good across the board. I would say SoCal's the worst of the worst, because the brokers are just basically, hey, the seller told me they would sell for this. Will you buy it? And but there is off market deals, because I went door knocking for 2 days in Newport and I got 2 deals. I was like, that's where I was like, oh wow, this is just not being done right. And so I do think that's a perception thing sometimes, because I do hear that in Newport, and there is deal flow out there. It's when you have to find the ones that no one's really looking at though. Like the cheap stuff, everybody's bull rushing in. That's actually what I train my team against. I'm like, because if everybody's looking at this deal, they're going to get all hot and reckless on it. We're
Right.
looking for the diamond in the rough that no one sees. And so that's where we have a lot of success. And so, like, your broker, are they like grinders? Are they crunching numbers? Are they like aggressive? Like, I would say that's probably a big piece right there.
Okay. So, no, I think she's great. I love her. She definitely will help run numbers in terms of like comps and send us properties. But no, like there's just, I mean, like I'm looking every day and there's just not like, there's just so many, even just looking at the market, like I just went and looked right now. There are so many flips on market and so many finished products. Like there's just nothing to fix.
Let me see. You know what? We're gonna do a little game right here. What can I find on Zillow? Let's see. Because I think everybody will enjoy this. I'm just going down a rabbit hole again. See. All right, let me look for a second. I'm going to answer Jason's question real quick, and we're
Okay.
going to pull this up, and I'm going to see if I can find you a deal on Zillow.
Okay.
Hold on. Jason, what's up, buddy?
What's up, James?
You doing good?
Good. I'm
I'm so mad at you, Jason.
I honestly, after I watched your story, I was in the house by myself. I was like, oh shit.
Hey, Jason, I'm a grown up. I made my own decision, and we had no idea what was inside those walls, and neither of us did. So you're good. You are good, dude. And you know what? Problem's fixed. So we're all good.
Perfect.
Yeah.
Because I really hope you make a boatload of money on that. And I
Me
hope you
too.
don't I'm not in a doghouse or or
You're
anything
not
like
in the
that.
doghouse, dude. We got a deal done, and now sometimes you find stuff in walls you weren't anticipating, and that's okay.
Yep.
But
Quick question, because we were talking about, deal flow and just you said the off market scene is gone crazy. What's your opinion on this new rule that's coming up in 2026 where the seller have like 10 days to cancel the contracts and et cetera in Washington here?
I'm not too concerned about that, because honestly, we let sellers out of contracts regardless if they don't want to sell, and very rarely does that happen. it definitely adds a little bit more squirreliness. So you guys in Washington, technically a seller can change their mind after 10 days. Or they can, they also have a right to order an appraisal on the property of signing a contract. And if the appraisal comes in different and not what they wanted, or it comes in a lot higher, they can cancel it based on that too. So, but Jason, I'm not too worried about it though, because I've always let sellers out of contracts. And I would say out of all the deals we've done, it's probably only been like 20 times where it got weird like that.
Gotcha. Okay.
But yes,
Yeah.
what I will say is you got to pay attention to what's going on in your market, and that's a good thing because that is a change right there. It's
Yeah.
and so if they keep ratcheting up those laws, that's going to be a problem. Like if they keeps right now, I think it's reasonable, but it could become a major issue if they keep going with it.
For sure. Yeah. Okay. Thank you.
Good question. All right, Nicole, I'm looking. Let's see. I'm gonna do a test on your market real quick though.
I'm excited for you to prove me wrong. I'm excited for you to find
Oh,
me a
I will
deal.
always find a deal.
And I know I do not doubt at all that you will. So this is great.
I'm just trying to get my bearings on Zillow. I'm not used to it. Square footage. Let's do this. I'm gonna go 2,000 square feet and above. And we're
Is there
in
one in the top corner there for 108 million? Jesus. Wow.
108 million. Wow, oh wow, look at that thing. Oh, I found your house. Okay, you guys, so what I'm doing right now is Zillow, like even when I go into different markets right now. So I don't know San Diego that well. I know the areas I like, but I don't know the math. But so what I try to do is I start shrinking even when I'm going into any kind of market. It's going, okay, well, how do I start looking at what's trading, what's not trading? So the first thing is for sale. I want to start narrowing this down. So I did 3 bedrooms, 2 bath or above. And then I'm going into kind of square footages is usually what I do, like 2,000 square feet and above. Okay, so just in this pocket right here, I can see that this thing's kind of capping out from, I'm going to do this. So I'm going to put this at 2 million or 2,000 square feet to 2,500. It seems like 2 million to 2.25 is kind of the number in this zone here. Now, as I try to get familiar for this here, I'm going to go a little bigger just so I can. Then I got, okay, now they're at 3 million. And I'm going to look over here and go sold. Ooh, there was a deal. You missed it, Nicole.
The 1.52.
148.
Yeah, but see, I would be super curious. I would love to look at that one and see was it ever even on market. It may have been. I'm not saying like it's not possible.
You know what? If they have this many photos, it typically has been.
Right, that's true.
They have 50. They had. Have your broker pull this up and see how fast this sold.
Okay.
And then, so you guys, a lot of times I like to just fact check and go, okay, can I find a deal here or not? Well, this house here, this sold for 2.25, was really close to it. It's the same square footage. Ooh, this one had a little view. But at that 148, right? So in this area here, if we look at, because it only takes one, right? That's what we're always chasing down on market. We don't do a ton of volume, but we're getting the one. And then you have another one here. This is another prospect here at 1.5, right? 2,400 square feet. That actually looks like this is a buy here. Because that one that sold for 2.4, this is a better house than that. I mean, and I don't know, I'm doing it quickly, but I mean, this has like vaulted ceilings. You got a same view. You have the same square footage. This one kind of looked a little awkward. That was a buy here. So pull this one up too. See if it hit. Where does it say days on market on Redfin or
It's
Zillow?
usually in the history. It's actually in like the trend, the property history. There you go, price history.
Listed 217, went pending 3.9. So here's the difference. It was listed for 1.8, and so
Right.
that's the question. Will you take 1.5?
Yeah.
Because that was definitely a deal. Because that's got to be worth what, 2.1, 2.2 from what I'm.
Yeah.
And it didn't look like it was that heavy of a fixer either. Because you got this one. This is a good house. I mean, this would be a reference point. Like even if it's worth kind of that 2 million, it should pencil out right there. And then you got this one. What was that history? So listed for 1.7. It's weird. I think something's off here. Oh, this sold on 822. That's an old sale. We don't want to look at that one. Let's see. So if I'm looking in this area, then active wise, right? I'm gonna go, okay, for sale active. I don't really care what's $2 million or above, because that's kind of the range I'm trying to get into, right? And so where am I at? I'm gonna bring it down to like 1,700 square feet, even 1,500 square feet. And then I you shot this by price again. I used to use my app. Right, so here we go. All right, so this one right here. What's the deal on this? 1,600 square feet, little small. 1,900 square feet, 1.6 right here though. They cut price. We saw what 2,400 square foot houses were selling 2.2-ish in there. But this is probably right on the cusp here. Let's see. Dated house. Remember that other people offered them 300 grand off and they took it, right? So ooh. Ooh. Was I just fishing and you kicked off already? Nicole, can you hear me?
She got
Yeah, I can
disconnected.
hear
But
you. My phone died like maybe about 60 seconds ago, so I had to jump on my laptop.
Yeah, so here's this right here. This is why I'm narrowing in on this, right? I'm going, okay, well, we saw, now I want to check sales. And you guys, this is what I do when I go into any market. I just kind of play with the numbers and go, okay, well, what's for sale? What's selling? And then I start shrinking it down because right here, that one was 1.6 and change. But you do have one at 2.2 really close to this house. And that's a smaller house, or 1.63. So like that house right there at 1.63, that's kind of a cool house. But it seems like that house was 2,000 square feet. This is obviously next level. It seems like you could get that house pretty easily into that 1.819 number without digging too deep. But you got, 196 for 1,900 square feet. You got some really dialed in stuff at 2 million, 2.1, 2.2. But this is very similar area from what I can tell. And again, I don't know this area as well. But the data is saying that it could be worth around 2 million, right? This one's active for sale. They just cut price on this and they did not sell it. And so, because that one that just sold right there was right by this thing. So I want to dig into this a little bit. Like, what's the story on what's this one at 2? Okay, so that's a partially updated one. like at 169, they've been on market now. They came out at 416, so they're in a slower market now, right? They
It
came out
might
at
have even been,
185.
if you go down, there might even be more history. It might have even been before April.
And so they're 24. They tried selling this already. Oh, that was rent. And so now
They
they're
tried to rent it, yeah.
yeah, so it's a rental. So they started at 185. They went pending one time, it kicked, and now they're at 169, right? So in 2 months, they've dropped the price almost $150,000. So they're on a path signaling, I want to sell this house. This is no longer rental for us. If this house is worth 2 million bucks, like, and it looks like, and again, I would have your broker comp this house because I think something dialed in could be, it looked like it could be 2,050,000, or there was some stuff selling a little bit higher too. Again, verify that. But if I'm looking at this deal, see if I'm looking at California hard money, get that deal 6 months in and out, and that's at, let's say that house, what do you think, at 300 grand? Would that be about right in that area? What's it cost to renovate 2,000 square feet right there?
Oh, not 300 grand. I'd probably say 250, maybe even, yeah, I did 250
Right, 250.
on the safe side. It could even be 200. We did that 2,600 square foot house for 230.
Okay. So it's not a deal right now, but that's okay. That's what we, because each market we position it differently, right? Like, okay, what do we need to do to get this price down? And they're already signaling that way. I would have your broker check that too. This could be low to that 2,050,000 right there.
Right.
And so again, I was kind of guessing real fast on this, but let's see. Let's see, sold. Because this one sold for 2.2 and it's only 1,500 square feet. This is like the one that looks the most dialed.
It's so interesting. That one looks like the exception when you look at the others in the
Well,
same neighborhood.
that is true, but the other ones also aren't that renovated when you're looking at the data.
Right.
And so like 185 here, right? This one got 185 and it's not very big or nice.
Right.
And so I like that I'm already buying it deeper price per square foot than that. But then we got this one at 2 million, which I actually kind of like this house.
Which is at 2,600 square feet.
26, but it's original
Yeah,
down studs,
yep.
right?
Okay.
So don't really care too much about that. So we want to find, what is this thing worth dialed? This thing's renovated. There's this thing, that's a concern because this thing's pretty nice.
Yeah.
Or is it? Curb wise. You know what? This is kind of
Oh,
weird
interesting.
too.
Yes.
Right? So, oh yeah, not that dialed. So
Yeah.
maybe the values, that's sold for 2.1. Like if you dial this thing in, are you worth 2.2? Because that's not that good on a price per square foot. And then, I mean, I like the curb appeal, but the rest of it's no good. And so I'm seeing that no one's buying this house right now, but they're actually, I mean, again, double check these numbers, but like I look at this, and if we're putting in 250,000, we should be worth more than this because we're about the same square footage. You're going to be dialed in, nice. My
But
guess,
that's a four bed, 4 bath versus like a 3-2.
but we should be able to build that into the plan though, right? Because you have almost the same square footage.
Right.
And so like this house here was not fixed up. And so how do you get it to a 4.3? And because that one kind of looks like, it looks good from the street, but when I was looking at it, I'm like, the staircase is weird. It kind of looks like an
Yeah.
add-on house, actually. Like, you see how there's weird beams going on? Your staircase is a really weird. This isn't normal here. And so it just looks a little off. I think they shined it up, but I think this also could just be like kind of not that great of a house in general. And if we're looking at fully renovated, typically San Diego, Newport, Belt, I mean, people are going to pay a lot more for a renovated house.
Yeah.
And so I would narrow that in because if you are at 2.2 there, and let's say you put in 300 grand, you make it nice. And you can get 2.2, which from the limited data that I'm seeing, it looks about right because there's a lot of stuff at 1.8, 1.9 that isn't fixed. But if you hit them at 1.5, which we saw that one deal sold for 300 grand off list, right?
Yep.
If I hit them at 1.5, 300 and 2.2, there's money on that. And they've already signaled that they will cut price numerous times. And that's why I never believe when people say there's no deals in the market. This is something to work, right? And we took 10 minutes to look for this. And so I always start with square footage and I start backing it down. Like, okay, real roughly, I'm seeing things are selling from 2 million to 2.5 here. Okay. They're all under 3,000 square feet. So then I start going, well, what's for sale under 1.8? And I'll just, and so I would set up a search in that area. Anything below 1.7, you need to look at 3,000 square feet. But and I'm not saying that this is a deal or not, but I feel like that's a good prospect because they're cutting price. They want to sell.
Right.
They had tenants in there. They're gone now. They're not making money. Hitting them at 1.5, why not?
Right.
But narrow that value down too, because maybe it's worth a little bit more. The comps I saw were not really good comps anyways. They were just kind of weird or a little bit different. But what's this? 1.3? That's free. Oh, what's this? Have I? 1.3 is pretty low there. Oh, and look at this, you guys. This is I want to sell, but I don't know what to do. They cut their price 25 grand. That's a do nothing price drop. That means they're freaking out and they're not getting any showings, and the broker's just trying to make their client happy.
We can't see
I'm
Oh,
seeing
you
a
can't see
partner
it?
calculator.
Oh, no wonder you weren't getting excited what I just found. Okay, so this 1.3, they cut the price 25 grand, you guys. That means the broker is going, this seller is harassing me to sell this house. I got to tell them something. And they cut it 25 grand on 1.3 is a do nothing price cut. It's just to get people to look. No one's looking at this house. I can tell you that much. Because you wouldn't do that price cut otherwise. All right, let's see. What's for sale in this area? Up to 2.3. Sold 1,700 square feet. Well, no one. Yeah, they might be overpriced, but I would dig into that deal I just found.
the one before.
Yep, the one that was 1.6 and change. Have your broker run a really good CMA. Make sure it's worth that 2.2 number, which I think it would be. It could be worth more for all I know, depending on the reno. And then I wouldn't think much of asking for 1.5 on the number. That's 10% off. People are throwing 10% off numbers everywhere.
Okay.
Ooh, that was a buy. 2,700 square feet.
Nice.
23. And find a broker that will just shotgun offers out all day for you.
So that she will. If I say, hey, I want to write at this value, she will.
Okay.
Yeah.
So what I would do is put her to work, pull everything, like in that neighborhood. If I know it's worth 2.2 for around 2,000 square feet. Okay, so it sells for about 1,000, 1,100 a foot, right? Any property that's listed for around 800 a foot, that's a discounted property. I would have them write every one of those low.
Okay. Okay. Yeah. Admittedly, I actually hadn't looked in this particular area because it's in the flight path right by the airport. So
Got
it's
it.
like one of those areas where it's like when the market's kind of soft, I kind of try to stay away from an area where people are like, the airplanes that are always flying overhead, maybe not in this neighborhood.
And fair enough. Maybe that's the right answer too. I can tell you the house I'm selling for 10 in Newport, planes go right above the house randomly. But kind of blew my mind when I moved in there. But yeah, and that's okay, right? Like if that's something weird, then that makes you nervous in a flat market, don't buy there or buy deeper.
Yeah, but it's helpful to see like, yeah, I just need to get comfortable again with just writing lowball offers because she will like we've had that chat. She's no problem shooting out lowball offers.
And I was trying to walk you through like what I'm looking for. Like, okay, where's the price per
Yes.
square foot? And then I can shrink it real quick to what I'm looking for. Because I didn't look at 100 houses. I narrowed in on 2 really fast.
Right.
And it was just, okay, things are selling 2, 3, 2 with this minimum square footage. I put the filters in and I'm like, all right, I want to look at anything under 1.8. That could be a prospect.
Yeah. Okay. Thank you.
Yep. Oh my gosh, well, I love looking for deals. That's what, but I think we hit all the questions. So, you guys, good call. Went over a lot of things. And actually, I just had fun finding deal. Tell your broker I'll find her some deals, but she got to pay me.
I mean, she's hiring, so you could come work for her. She's getting her broker's license.
Well, I don't want to work for her. She can work
I'm
she
just
can work
kidding.
for me. So, all right, guys. Well, I'll see you guys next week and buy smart, guys. Run your numbers. If you don't like the deal, move on to the next one.
Thanks,
Thank you,
guys.
James.
Bye, guys.
Appreciate you.
Bye.